all three players, whether it's Microsoft, Amazon, and Google, to do well. So I think we'll see a lot of cloud business. And YouTube, I think, is a great standalone business, but there is a cyclical element to it, and that's why YouTube isn't growing as fast as their cloud business.
Well, the reason we have like 27 tech analysts at Bloomberg Intelligence, I mean, they're all over the place, is because I think the U.S. just said 50 years ago, just light touch on regulatory. Let these guys in Silicon Valley do their thing. And that's what created the great technology boom, in my opinion, as opposed to Europe, which you got nothing.
Right.
So now, I'm not sure if the cat's out of the bag for a lot of these things.
Yeah, I don't know. I don't know. It would make life more interesting, though, for our antitrust Bloomberg Intelligence people and Mandeep.
Gives him a job.
All right, Mandeep, thanks a lot. Mandeep Singh joining us from Bloomberg Intelligence. Coming up, Enda Curran on China. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The major stock averages, they are higher to little change. 7 of the 11 major industry groups in the S&P 500 are up. You have industrials and financials in the lead. And communication services, that's the biggest drag, and that is home to Google parent Alphabet. Antitrust enforcers weighing an historic breakup to mitigate Google's dominance in search. And shares of Alphabet, the parent, they are down right now 1.7%. Overall, the S&P 500, 7 points higher. That's up 0.1%. We're at 57.58 on the index. The Dow Jones Industrial Average up 117 points. That's a rise of 0.3%. And the Nasdaq 100 up 21 points. That's a rise of 0.1%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
All right, John Tucker, thank you very much. I'm Alex Steele alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. We bring you all the top news in business and economics and finance through a lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries worldwide. We also tap our wide network of Bloomberg reporters all over the globe. And this time we want to go to Enda Curran. He's Bloomberg Global Economy reporter. He lived in China and covered China as a reporter for many, many years, and he joins us now, this time from D.C. So, Enda, we are looking forward now to this Saturday meeting where officials in China, they will hold a briefing to introduce moves aimed at strengthening fiscal policy. Can you break that down in real speak for me here?
Right, so we've had a roller coaster over the past few weeks. Remember, everyone has been waiting for when China might turn a corner. We had a big announcement of support a week or two ago that was lower interest rates, support for policy developers, support for the banks, and of course the markets went on a tear. The expectation was now here comes the cavalry. What has happened since then is that markets have been disappointed. There hasn't been any real detail on extra government spending, which is a real missing part of the jigsaw. So we're at that point now where markets are disappointed. Where's the money? And we have coming up on Saturday this press conference by the finance minister, which is unusual timing, unusual day. And of course, now we're getting into the kind of phase of heightened expectations again. We had some officials already come out this week and disappointed investors with their kind of guarded commentary, but now there's expectation. What's the finance minister going to say on Saturday? Will he announce some extra new money, which is the kind of, as I say, the missing part of the jigsaw so far?
All right, so for fiscal stimulus, what would be the most effective? What do you think market participants are really looking for that would meaningfully impact the Chinese economy?
I think a big figure, number one, a big commitment from the central government that they're going to put a lot of money into the economy to turn things around. And there's two kind of areas that everyone's focusing on. One is obviously the real estate slump. That's kind of been a well-known story for several years now. That's the real albatross on what's happening. That's the big multiplier, just like any other economy, the U.S. economy. So any money put into that sector to turn things around. And second of all, the local government sector. That's where the real kind of debt burden is in China's economy, not the central government, the local government. So will there be support for the local government to go out and either invest in these property developments that are left unfinished, make sure they get done, or of course invest in other areas like new infrastructure, and not just roads and bridges, but new infrastructure like high-tech infrastructure, clean energy infrastructure, and the like. There's plenty of areas where they can put shovels or spades in the ground. So I think a focus on the figure that will be announced, if there is a figure, and then a focus on where that's going to go.
What do you think where in the markets do you think we're going to see the most reaction? I mean, it feels like the tourists within China, and by that I mean overseas investors that kind of piled in at the first hint of stimulus and then maybe piled out at the same time. Like, where do you think we're going to see the most flows?
It's a tricky one because, you know, the authorities did announce some support for the markets when they made that announcement of support a week or two ago. But, you know, pumping up the markets isn't necessarily a focus for the authorities in China. We've seen this before. We've seen big market rallies come back down to earth. So again, if we do get a big spending announcement on Saturday, you'll probably see, and again, depending on the nature of it, we'll probably see maybe the commodities sector, I would imagine, being most exposed to that. Again, in terms of trading partners looking at that would be your Brazil, South Africa's, Australia's, if they're seeing potential for new infrastructure spending, new investment by China, that drives demand for commodities. But writ large, though, my only observation would be that the market reaction isn't necessarily the focus of the authorities typically when it comes to this.
And it seems like, short-term or intermediate-term fiscal stimulus aside, China's just got some fundamental long-term challenges, like the fact that there's aging population, they're not having kids, and somebody's got to fund all that, and and maybe the world's getting a more difficult place to be a global trading partner these days. I mean, That seems to be the bigger issue, and I'm not sure there's a fix for any of that. How does the Chinese government kind of think about that?
Yeah, I think that's right. There's been a lot of skepticism this time around the Chinese stimulus, because even though there might be a near-term sugar hit, it's interesting. I've seen a lot of analysis make the point, but hang on, all these other problems haven't gone away, and you just named them. You've got the aging population. You've got this big geopolitical realignment going on now. The years of low-hanging fruit, the go-go years for China's manufacturing economy is gone.
Mm-hmm.
What happens after the U.S. election? Who wins? That will dictate a lot for sentiment on China as well. So I must say, compared to previous cycles of China support, when the world has reacted with a big kind of a celebratory response, it seems very subdued this time around. And I think that goes to your point. People know there are bigger issues at play as well.
All right, thanks so much, Enda. Really appreciate it. Enda Curran joining us, Bloomberg Global Economy reporter. All right, in the markets, what do you do if it's still going to be higher for longer, in that maybe we're pricing out some cuts by the Fed in 2025? This year may be a done deal. Next year, though, the market has repriced a bit. So let's get some details with Shelby McFadden, investment analyst at Motley Fool Asset Management. Shelby, it's always so wonderful to speak with you. One of my big questions is, if we do get a longer economic cycle, and the idea is higher rates for a little bit longer, lower than they are today, but still relatively higher, can stocks continue to beat bonds? And if so, where in stocks?
Yeah, I do think that the battle starts to get a little bit closer because really the question is, when will consumers, or investors rather, make that switch from bonds to risky assets, right? So the fact that stocks have continued to beat bonds thus far has already been something that's a bit more of a phenomenon, and we know the main leaders that are driving that. So it would really have to be a matter of, in my view, yields coming down to such a level that they're higher than we've been used to over the last 4 years or so, but not quite high enough to justify completely coming out of risk assets. So I think that's the sort of fundamental part of it. I think the second part really comes from the narrative, right? What is it that these growth companies claim to be offering? What is the secular shift that's going to propel so much of this growth? If the growth is not going to be broad, if it's going to continue to be concentrated, then I think it might be a little bit more of a tussle between the two for stocks to keep on winning.
Shelby, I'm just a little uncertain about the consumer. Yes, I like rates coming down, and I think that's good for the consumer, but how do you guys think about the consumer and owning stocks that are dependent upon the consumer and retail spending?
Yeah, absolutely. I mean, from what we've seen from a lot of the banks, the payment processors thus far, and of course knowing that we've got banks coming up soon, has been that consumers for the most part are doing okay. That's not to say that inflation is completely over. That's not to diminish the fact that in some locales it's a bit more significant and over certain goods and services. But for the most part, people seem to have adjusted. They have definitely spent down savings, so discretionary is a little bit lower. But they have figured out how to live on the income that they have. The job switching has slowed down a lot. So we're not as bearish on the consumer as a whole as some others might be. But in terms of playing the consumer, that's where the active management comes in. We take the time to pick the companies that are run well. They have great operational leverage. They can go ahead and move with the consumer as they need to. So that's why we've got companies like Costco in our Motley Fool 100, in our Global Opportunities Fund. Those are names that are consumer facing, but they tend to do the best out of their peers because of how nimble they are.
Which also on your list is American Express. And the idea typically is that, American Express caters to higher income earners. So if you're looking at the K-shaped economy, that part of the K is actually going to do really well. BTIG actually cut the credit card company to sell from neutral, saying that fundamentals are slowing for those super prime customers. What do you see?
Yeah, so for the one thing, we do know that they're a little bit sticky. And yes, we have that slightly longer runway for higher end consumers, but they tend to have already made the big decisions to get rid of large bills, right? So if they've sort of held on to that annual fee card for about 2 years in this tightening cycle, they tend to be in that part of their elasticity curve where it's kind of like, you know what, we're good to go here. Even though we may be in a little bit of a higher for longer situation, there has been some relief, right? There has been some relief on credit conditions, and if we even get another 25 basis point cut this year, and maybe another one in Q1, that makes even better conditions for going a little bit down market. Now, in looking at American Express, they're not interested in going completely down the river. That's not really their prerogative. But there is an opportunity in the high earning categories of Gen Z and young millennials that they have an opportunity to go ahead and catch, but also knowing that these earners have a little bit short of a credit history. So as credit conditions soften, there is an opportunity there to go ahead and get a little bit more of the market to go ahead and sort of adhere with their already sticky premium base.
I'm still a green card holder. They try to upsell me for all the other stuff. I'm like, I'm staying with the classic green card.
Okay, here's my thing with that.
Use what you need.
So
I know.
my husband has the purple fancy one, right?
The what?
Somehow I only have the silver one, but I'm the one that spends all the money and pays the bills. And I don't like that. I don't like that at all. And somehow, like, I'm not in charge of this. It's still under his
What does
name.
that
It feels
cost
a little
you a year
antiquated.
now?
Me?
Green
I
card.
don't
Him,
know.
nothing. Me, I think it's $500.
Oh, jeez.
Oh.
That's such a scam.
Nothing
Oh,
for
please.
$5.
All right, Shelby,
No.
I get reimbursed.
let's go where John and I shop, Costco. It's not just for the $1.50 hot dog. Talk to us about the Costco story.
Yeah, the Costco story is one of just prime operators. I mean, I think that's the simplest way to put it. So they were able to navigate not only supply shortages in sort of the middays of the pandemic recovery period, but also navigating the depths of inflation, or the heights, if you will. They were one of the few companies that was boasting about lowering prices. So not only do they have this annuity model where they're going to be making the majority of their money in terms of absolute dollars, but in margin on the annual fee that they're charging, but they're able to garner more consumers by saying, hey, we're going to give you the best deal you can get, obviously in a large amount, so as long as you have enough room in your house, but they're able to keep people in that regard. And because it's an annual fee, it's something you budget for once and then it sticks. Also knowing that they were probably going to have more in stock, having that really robust shipping network allowed them to hold on to people. So just, I think consumers knowing that Costco is sort of on their side is a breath of fresh air compared to some of the other retailers. So the operators there, the succession planning went fantastic over the last 12 months. No one's really had any concerns, and there's a huge opportunity for e-com. A lot of folks really just kind of trudge through it on the sort of legacy platform. There's that Instacart partnership they have right now, but we give Costco another 5 to 10 years, they may really have something to compete with some of the peers on e-com.
All right, Shelby, we always appreciate you. You have the best stuff, honestly. Thank you so much. Shelby McFadden, investment analyst at Motley Fool Asset Management, joining us from Alexandria, Virginia. Wait a second, they have a $1.50 hot dog? Still?
Yeah.
Still?
Or $2.50. What is it, John? $2.50.
I buy them in bulk.
No, it's, what is it, $1.50?
No, but the one where you go and you
Ken's
get it
fine.
like in
Yeah,
live.
and-
You get it live.
Right by the door there.
It's to die for.
I still don't have a membership.
I mean, at least Mateo's.
Hey, how can you shop there without a membership?
He doesn't shop there.
You want to tell her?
Oh, you use someone else's membership. I got it.
I'm
Look
not
at
admitting.
me.
I admit to nothing.
Look at me being all smart. All right. Coming up, we are going to break down this Hurricane Milton that's barreling towards Florida. We'll talk to Mike Sullivan, energy and utilities consultant at PA Consulting, on the resiliency of the utilities and the preparations as the hurricane barrels towards the West Coast. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And the major stock averages, they are all higher right now, just slightly. I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. S&P 500, 11 points higher. That's up 0.2% at 57.63 of 7 of the 11 major industry groups that are up right now. The biggest drag that's coming from communication services, and that's home to Alphabet, the parent of Google, as antitrust enforcers weighing an historic breakup to mitigate Google's dominance in search. Shares of Google parent Alphabet right now down 1.6%. Friday, J.P. Morgan Chase and Wells Fargo, they're going to kick off the first of the bank earnings with the Federal Reserve's 50 basis point rate cut just last month. All eyes are going to be on the forecast for full-year net interest income. Minutes of the Fed's jumbo rate cut meeting, they're going to be released today. They should show the downside risk policymakers thought warranted that 0.5% cut. And Chinese stocks listed onshore suffering their biggest drop in more than 4 years. The CSI 300 index plunged 7.1%. Boeing shares, they are down right now 2.8%. S&P Global Ratings placing the plane maker's credit rating on Credit Watch negative. This as the machinist strike enters a fourth week, and as the company said it has withdrawn its recent offer to the union. So no end to the strike in sight just yet. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
All right. Thanks so much, John Tucker. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from Interactive Broker Studio right here in Midtown Manhattan. For the last few days, though, Paul and I were in Orlando at a Commonwealth Advisors Conference, and Orlando was getting a little bit dicey. The winds are picking up. You had rain, and it looks like that Hurricane Milton is just barreling towards that west coast. And it's very, very dangerous, particularly for those on that west coast. So you want to take a little bit of a deep dive to kind of understand what it means, say, for power and utilities and the grid, because no doubt power is going to go out, but how long it stays, etc., is going to be very pivotal. Mike Sullivan is energy and utilities consultant at PA Consulting, joining us now. Mike, this is a very silly question, but how does a hurricane like this impact the grid and utilities? Like, what's the sequence of events of how this plays out?
Okay. Oh, good morning, and thanks for having me. At first, it goes without saying that Milton is on track. This will probably be one of the most destructive hurricanes in Florida history, and there will be extended power outages, both from winds and the wave surge. So both of those things will be in play. I think the most important thing is for the public to remember that the local officials are first and foremost their choice for information. These emergency management organizations, they are the glue that provide coordination between the state organizations, federal organizations, and first responders like utility workers. And right now there are some estimates that saying there are over 35,000 out-of-state utility workers who have converged on Florida to help in restoration. So it's going to be a huge effort. It's going to take days to restore power, and it's quite a job the utilities are up against.
So, Mike, give us a sense here of kind of the risk to Florida here. I mean, they've been through this so many times, unfortunately. What have they done? What can they do? What should they do to maybe try to, I don't know, safe-proof their grid perhaps a little bit more? Is there anything that can be done?
Sure. There's actually a state law in Florida that requires that utilities file storm protection plans every 3 years. The basic construct or compact that utilities have is to provide safe, reliable, and affordable power to all customers. Over the last decade or so, that has layered on top of that has come into play two other objectives: the clean energy transition and hardened and more resilient grids. So all the utilities have filed these plans to make their grid stronger to withstand events like this. to be able to restore power faster, and then, to think about the overall survivability of the communities that they serve. I think it goes without saying that the number and the impact of the kinds of events we've been seeing in recent years requires that greater investments be made. Those protection plans are good starts, but these grids are expansive. They've been built over 100+ years, and they need to be hardened and also expanded to support the clean energy transition and greater electrification due to data centers and a lot of other increasing electrical load.
Who pays for that? Is it going to be utilities and the ratepayers, or is it more of a grid operator? Is it the government? Where does that come from?
Yeah. So mostly, I said part of utilities compact is to keep rates affordable. All of these investments cost money. I mean, you're rebuilding major parts of the grid. And yes, ultimately, it does come down to raising rates for ratepayers.
All right, so Mike, you think about our grid, and you just look at the wires strung on these poles. It just seems like so technologically out of step with where our economy is. Underground wires, isn't that the future? I mean, as long as stuff's above ground, it's going to be at risk to, hurricanes and all kinds of weather.
Talk about being expensive and ratepayers paying more.
Sure. Absolutely. And for the last 30 years or so, all new communities are supplied with underground service. So that's been going on for some time. It's the older infrastructure. Oftentimes, communities are served. They were built in the 30s and 40s with what we call rear lot construction. That's lines that run behind people's backyards and butt up against other backyards. And those overhead lines are the ones that are particularly susceptible to coming down and taking an awfully long time to put back up because they serve only a few customers.
So when you say that, so a lot of investment needs to go in to help all of these things, whether it's the energy transition or it's weatherproofing, et cetera, and you mentioned that ratepayers eventually are going to have to pay. I mean, there's only so much tolerance for that. Do we know an estimate of what weatherproofing this industry as well as energy transitioning this industry is going to cost?
Yeah. So part of the problem is that oftentimes state regulators who approve these plans don't adequately consider what I call stack value is you are trying to build and upgrade your grid for more renewable resources, greater electrification. That is, they have to have more capacity, and at the same time to build them back more resiliently. Those two things, when you think about them as a stacked value, it becomes more understandable, more digestible. Estimates for undergrounding, it's very expensive. Florida and Power Light has a particularly extensive undergrounding program underway right now. But it's $1 million to $2 million, depending on which part of the country you're talking about, to underground lines. And most of the lines that are overhead and cause most of the problems are ones that run up and down city streets, commercial areas, that kind of thing. And even in the best case, whether they're hardened or not, oftentimes in major hurricanes like this, it's not just trees toppling on lines, but it's flying debris hitting poles and lines and things like that. So an event like Milton is particularly problematic, but increased investment can certainly help.
Hey, Mike, thanks so much for joining us. Really appreciate getting your insights here. Michael Sullivan, he's the energy and utilities consultant for PA Consultant. They're based down in Annapolis, Maryland there. So, again, the hurricane barreling towards the west coast of Florida. John Tucker and I read the book, The Grid, so we consider ourselves
you did? Wait,
we're experts now. Yeah.
Yes, we're experts. We're ready to do
All right, fine. I'll put
But
on the
you look
list.
around, and the technology looks like 1920.
Oh, absolutely.
Oh, yeah.
And you're like, really? I mean, can't we do anything? But as Mike Sullivan was saying, the new stuff gets built. It's getting built on underground. So, prayers out to our good friends in Florida. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
This is Happy Wednesday. Is it Wednesday?
It is.
It's not
Wednesday,
Thursday.
October 9th.
Is it?
See, what happens when
you're having so much fun, you've lost track of time.
I have.
Yeah,
Well,
see,
we're
when
actually
Alex
just
goes down
chit-chatting.
to the Disney World, she gets all it's out of her.
Oh yeah. I like dress
Totally
up. I do a whole
blanks out.
thing.
Right.
None of that's actually
Okay.
real. Okay. This is Bloomberg Intelligence Radio. I'm Alex Steele, John Tucker, Paul Sweeney. We are live from Interactive Broker Studio right here in Midtown Manhattan. This is where we also cover all the top things in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies in 130 industries all around the world. One stock we want to focus on right now is Boeing. It's stock down by about 3%. Boeing withdraws its contract offer as union talks break down. At the same time, S&P says that Boeing is at risk of a junk debt rating as the strike goes on. So who do we talk to? We talked to George Ferguson. He is Bloomberg Intelligence Senior Aerospace Defense and Airlines Analyst. Why do we think that Boeing withdrew this contract offer?
You know, I think you, if you're the company, you have to, make it look like there's a scarcity, I think, to whatever you offer, right? So that the employees are ready to jump the next time you give them, I think, a decent contract terms. But I don't know that it works here, right? So I think that it's interesting that they withdrew their offer, but I guess at the same time, I'm looking at the dock workers strike, and they just got an agreement for, 60% over 6 years. It looks like 10% a year to me, if my math still works. Boeing folks, I think, rejected a contract that was, 30% over 4 years. I think they're probably more highly skilled workers. No offense to the dock workers, but manufacturing airplanes a little more challenging, I think. So I think sort of the withdrawal is Boeing trying to make it feel scarce. I'm not sure that it works.
George, the more I think about this story, the more I read about this story, it just doesn't look good from a Boeing perspective in terms of leverage here. Boy, if I'm the union, if my guys can last a few more weeks, I can really inflict some pain here on this company here, which strengthens my position. How do the pros think about this negotiation between these two sides?
Yeah, I mean, I agree. I think it's really challenging. Like I just said, we've seen other increases in the marketplace for union labor higher than what this union's asking for. If you're Boeing, you just can't possibly replace 33,000 employees. There's just no way. And on top of it, again, they're skilled employees, right? So they're hand-making aircraft, right? And you would have to, if you decided you were going to backfill and train some, you'd have to have people on hand to train the new people coming in to make an airplane well. It's impossible to replace them. And now I think we're in this game of chicken, right? Where, like we've talked about previously, Boeing's potentially going to have a downgrade. But look, I think the downgrade doesn't matter as much anyways, right? It's just a credit rating. You can get it back later on. This is the recovery of this company. Cash is dwindling. They have a lot of airplanes sitting in inventory. They need to get back to work. And I think if the workers can find a way to hold out, they can get a lot of what they've asked for.
So I understand that then Boeing has to front it, right? They have to act like they're also playing hardball. How long do you think they can really realistically sustain that?
That's the question, right? Can Boeing last longer than the workers? If the workers can hold out multiple months, I don't think the company can hold out multiple months. I don't think there's customers that aren't getting airplanes. Like Airbus isn't making a lot of hay out of this, right? They're having similar problems with their supply chains, so it's not like they can surge and take a bunch of market share away. But Boeing can't let this go on for 3 or 4 months, right? That would start to hurt, I think, their market share. I think you'd see customers get in the Airbus queue just thinking, look, I just don't know when Boeing's going to right this ship and really build airplanes in large numbers anytime soon. So I don't think they have a quarter. I don't think they have 3 months.
How far apart do you think the two sides are, and is there any smart money betting on timing?
I don't know what smart money's betting on right now, but Look, it seems like when you pull back your contract and you stop talking and the union goes to its corner and they're kind of irritated, it seems like something hasn't been set up well, right? To me, frankly, I think it's probably bad negotiating, right? Don't you always kind of try to engage to a certain degree? So to me, it feels like they're really far apart because of just the rhetoric I'm hearing in the press. But like again, like a lot of things in life, some money can go a long way. It could put smiles back in people's faces, and so you could be surprised overnight if Boeing turns around and sweetens the offer and tries to get the deal done. But right now, it feels like they're a distance apart.
Well, aside from wages, obviously, which is a big one, what's another really big sticking point, or do you think it all just boils down to wages at this point?
I think a lot of it boils down to wages. We have heard that the union wants the pension back. I just can't believe they're realistically thinking they're getting the pension back. But so I gotta believe they're looking for a sweetener on the 401k. Some sort of added incentive there. And then the airplane. I haven't heard a lot of noise about negotiation about the next airplane. Again, if I were the union, especially if I was union leadership, the machinist leadership, I would want the next Boeing 737 successor built in the Pacific Northwest in plants that machinists are working at, because that's the lifeblood of your union, right? And that's the lifeblood of Boeing.
All right. Well, Alex Steele and I, we came home on a 737-8 MAX or something last night. Got us home just fine. Yeah, I checked it out. It
was nice.
Yeah.
Nice
George
toilet.
Ferguson, thank you very much, George. Senior Aerospace, Defense, and Airlines Analyst, Bloomberg Intelligence. Boeing does not appear that they are close to an agreement with their union. We'll keep an eye on that story because it is a challenge for both sides, certainly, but certainly for Boeing. If you take a look at their cash flow statement and their balance sheet and all that type of stuff, some pressure on both sides to get a deal done. Hopefully they can do it sooner rather than later. This is
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
the real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Wednesday, everybody. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. We have a great hour also lined up for you. We're going to talk about Disney. Some woes are mounting as we're going to see a drag from Hurricane Milton. They also said they're going to be raising their park prices. Paul was just there. We get on-the-ground reporting plus the analysis with Keith Ranganathan, Bloomberg Intelligence analyst on U.S. media. Kim Forrest will also be joining us, founder of Boca Capital Partners, her take on the markets. And stay tuned, because Citadel Securities CEO will be speaking live with Sonali Basak from Bloomberg TV from the Citadel Securities Global Macro Conference right here in New York. We'll be taking some of that for you as well. And lots more coming up in the next hour. All right, let's kick it all off for you, though, with Charlie Pellet with the Bloomberg Business Flash.
Thank you very much, Alex Steele. Welcome back to our New York studios. We have got the Dow, the S&P, NASDAQ, all advancing on this Fed Minutes Wednesday. Right now, the S&P best level of the day, and on top of that, we are looking at a record 57.72, where that index stands up right now by 0.4%. The S&P record 57.62. So right now, trading at a record, the Dow up 195, up 0.5%. We got NASDAQ up 64 now, up by about 0.4%. Traders are gearing up for key inflation data tomorrow morning when we get the CPI report. Also, big tech once again leading the charge. NASDAQ, as I mentioned, up 0.4%. The NASDAQ 100 index also up by 0.4%. 10-year now at 4.04%, with a 2-year 3.99%. Gold down $10, retreating 0.4%. And another pullback for West Texas. Intermediate crude down 1.5%, 72.42 a barrel. Coming up 2 o'clock Wall Street time, the latest Fed Minutes. Esther George is the former president and CEO of the Federal Reserve Bank of Kansas City, and she was interviewed this morning on Bloomberg Television's Open Interest program.
So I think what the Fed is trying to figure out is how to balance its two objectives for thinking about the labor market, for making sure that it gets back to its 2% target in a timely way, it means now they have to judge risk around each of those. And as those come into better balance, as they say, they're trying to decide where to put the weight on that.
And as we were just discussing with our George Ferguson, Boeing has withdrawn its contract offer as union talks break down. Boeing shares slumping now by 2.9%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pello, thank you so much. We appreciate that. As always, Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Live, and that's where you'll find us, Bloomberg Radio Live. Any of that kind of stuff will get you where you need to go. As Charlie was just reporting, a little bit of green on the screen here today. Let's look under the cover and see where some individual names are moving. For that, we're joined by Norma Linda, equities reporter for Bloomberg News. Nora, what are you looking at?
Well, I'm keeping an eye on quite a few stocks here this morning. I'm watching Norwegian Cruise. That's actually the biggest gainer by percentage in the S&P 500 right now. That's ticker NCLH. Well, it's getting a thumbs up from Citi. It lifted the stock to buy from neutral. It's saying that its strong recent performance of cruise stocks have really been viewed as a catch-up trade, but he sees the growth in Norwegian having real legs into the full year of 2025 and beyond. And shares are up for the company, up as much as 12% this year, but we're also looking at Royal Caribbean. It's advancing as well after Citi did place it on a positive catalyst watch for the stock. It's saying that the company Royal Caribbean has built the combination of brand assets and free cash flow that is superior to the company's own history. So pretty bullish take here when we're looking at these companies more broadly.
The analyst there at Citi, James Hardiman, University of Virginia.
Ah, wahoo wah.
There you go.
Wait, you're UVA too?
I am. I'm surprised she doesn't know this from us.
know.
I guess we haven't spoken about it the amount of
Maybe
time.
I just blocked it out because I feel like everybody just
Emily
goes to
Grafeo
UVA.
and
Emily,
Kelly Lyons.
yes, quite the crew.
I think, did Danny go?
She did go.
She did go.
Pretty.
Okay. Yeah. Oh my God. Okay. Anywho, so if I take a look at the worst decliners in the S&P, a bunch of them are power players. So Constellation, Vistra, NRG. But then after that, it's Boeing down 3%.
It is Boeing, and I mean that's really been a story that many people have been following today. I mean, this company has really been in focus after negotiations to end a month-long strike have collapsed. I mean, we had S&P Global Ratings actually changing its rating, its credit rating on the company to junk. So this has really been a disappointment for many investors who have really been looking for a pickup in Boeing. This is not what you want to hear, that this is something that's going to be drawn out from a company that's down 42% this year and has been really seeing all these different struggles. And many people are looking to see their way out.
And last up, last but not least, we got to go to insurance stocks, right? So
We do.
That's the interesting part about the storm that's coming, Hurricane Milton, is that some of the projections are huge for damages, but only a portion of that will actually be insured.
Right, most definitely. I mean, these stocks have been pretty volatile over the past couple days. Right now, many of the names that I'm looking at are actually in the red. I'm watching stocks like Heritage Insurance, American Coastal, HCI Group. All these stocks are lower. Of course, we know that Hurricane Milton is intensifying on its way toward Florida. And of course, we know this is literally just 2 weeks after Hurricane Helene, less than 2 weeks ago. So really much to watch and lots of things really reverberating throughout the sector more broadly.
I mean, you think about it, the 15-foot sea surge. My question was, where does that water go? And I think the answer is not anywhere good. You know?
No, exactly. And what's so interesting too is that you take a look at how hard it is to be in Florida. I mean, your insurance is going to skyrocket. Are you
If you can get insurance.
If you can get insurance, it's going to be huge, right? I was reading an article, I think it was from the Journal, that certain areas of Florida are like just no longer attractive. So if you want to sell, like you can't.
You can't even get rid of the home.
Yeah, like maybe not in Miami or certain areas, but in other areas, yeah, like Tampa, and that's going to be just really, really rough.
It's definitely a pain point.
All right, thanks so much. We appreciate that. Norma Linda joining us, Bloomberg Equities reporter. And then we announced that Disney was closing.
Yes.
Paul got in the nick of time.
Yeah, so I was there, when was I there?
You
Sunday.
were there Sunday, Monday.
Sunday, yeah, Monday, a little bit Monday. And even during the rain, and it was raining, it didn't stop people at all. You buy the poncho for like $15 each. But you buy the poncho, and they're just standing there. And you know,
Yeah.
Disney's a place it's kind of like when I go skiing. I don't even think about the money I'm spending because that would be too upsetting and it impact your enjoyment of what you're doing. So you just kind of shut your eyes and go. That's how you do it at Disney.
Yeah.
But apparently there's going to be a financial impact to this whole thing.
Interesting. I
Yes.
wonder how long. I guess it depends on how long it's going to be closed and if there's going to be flooding and all the like.
Fortunately, we pay somebody to think about this stuff. Geetha Ranganathan, she's a media analyst for Bloomberg Intelligence. One of the big names that she covers is the Walt Disney Company. She knows it back, inside and out. And, Geetha, I've covered Disney for a long time, and we never really cared that much about the theme parks. They were a nice business. They contributed nice profits. They kind of grew every year. But now, if you're thinking about the Walt Disney Company, investing in the Walt Disney Company, you better be really bullish on the theme park business because that's now the major part of their profitability. So talk to us about the theme park business and what might be some of the risks for shutting down Walt Disney World.
Yeah, absolutely right, Paul. So it's about a third of revenue, but it's about 2/3 of profits.
Wow.
Almost 60 to 65% of profits. And that is a complete shift, as you correctly pointed out, from just a few years ago, maybe even just 5 years ago, before they kind of went into the streaming business, before the linear TV business kind of is seeing the secular declines that it is right now. So it really, the picture has kind of completely changed. And that means there is a lot of attention and a lot of focus on the theme parks. We do have, some prior hurricane closures to go by. So they had one in 2022, which was Hurricane Ian. When they closed the park for 2 days with Hurricane Ian, they lost about $65 million. That was the operating income impact. You had Hurricane Irma in 2017. There was a $100 million impact. We think, though, that with more and more reliance on the theme parks, just with the fact, that it's become a bigger revenue contributor, a bigger profit contributor, obviously the financial hit is also going to be larger. Remember, just the Florida parks pull in roughly 135 to 140,000 visitors every single day. It's 50 million visitors a year. So, it obviously has huge ramifications. It's losing roughly, $50 million per day. We think the operating income impact will be at least 125 million.
So this is the first time I've been to a Disney property as a civilian. The other times I've been to a Disney property is always with Bob Iger walking next to me. Mm-hmm. So with analysts and investors and things like that, when they either close the park, so we're the only ones there, or they give us like some super duper passes that we can just zip in any line. This is the first time I went as a civilian where I had to kind of wait in line and do all that kind of stuff. But gajillions of people do it, as Geetha was just saying.
At the airport, there were definitely reports of little children being just sobbing because they had to leave Disney. So, you said they're losing $50 million per day by shutting down Disney World. Like that's how big that Florida resort is for them. I heard that right?
Yes, absolutely, yes.
So,
go ahead.
Do they make that up? Is it then that pent up demand, or is this just lost?
This will pretty much be lost because remember, it's not just the park closure. There is obviously going to be some, longer ranging repercussions for, all of the theme park businesses in Florida, in the Orlando area. So we are actually expecting attendance itself for the fiscal first quarter, which is the current quarter, to actually be down maybe about mid-single digits. Attendance was flattish in the September quarter. There is definitely pressure all around, and this obviously is not going to help them at all. The other thing that we're watching for, Alex, as we kind of get into 2025, and this is going to be a special pain point for Disney, is that Universal, its closest rival, actually has a new theme park that they're opening in Orlando, and that basically doubles Universal's footprint. They're adding Epic Universe sometime in March, April of next year. Again, a lot of people have been holding back on their travel to Universal because they know this new attraction is coming. And so again, we think that's going to be a little bit of a hit for Disney once we get into 2025.
It's funny you mentioned that, Geetha, because I rode home with a Scottish family. They were on their way back to their home in Dundee, Scotland, and my seatmate, my new buddy, Rayleigh, I thought he was 18. Turns out he was 13. Huge. They're growing and big over there. But they came, as a family, over from Scotland to Orlando just to go to Universal. They didn't go to Disney. I'm like, really? Wait a minute. So I turned around and asked his mom, this kid's telling me you guys came all the way here and you just went to Universal. And she said, yeah, they're big Harry Potter fans, so they do all that kind of stuff. So and that's a Comcast property, isn't that right, Geetha?
That is a Comcast property, and you're absolutely right. I mean, it's for the younger kids, like the 2 to 10. I think Disney still continues to be the go-to. But once you get into the teenage years, yeah, you're absolutely right. Harry Potter seems to be like the bigger attraction. You find a lot of families going there. And Epic Universe is going to have a lot of that as well.
Also,
More
to be fair, can't they
focus.
just like hop over to Paris to go to Disney World there?
It's not the same.
It's not the same. Okay, well, fair enough.
Been there, done that. Hey, Keith, I know Disney is really ramping up their investment in their parks, right? Didn't they like double their CapEx over the next number of years?
Yes, $60 billion in CapEx spending over the next 10 years. Almost $12 to $15 billion of that will just be for new cruise ships. They're really kind of doubling down on the cruises. So that's going to be a big part of their business going forward. But absolutely, they're almost doubling their footprint in some of the areas, like especially in California, they're kind of going to double their footprint, going to almost add a whole new park in Orlando when all is said and done. So yeah, big investment in the parks, and they're kind of hoping that's going to pay off as they keep increasing prices.
So I sent Paul an article this morning. It was like one of the first things I read that when it came in, that Disneyland raises prices by about 6% on the most popular days. So the most expensive tickets now, typically weekends and holidays, are climbing over 6% to $206 a day. At what point here are we capping out on price increases? I mean, if you have a family of 4 and there are 2 parents, Julia, it's $1,200 for one day.
I don't think we're capping out. I think, Paul kind of summed this up perfectly. Once you go there, you're not thinking of how much you're spending. And so actually, as we kind of model out the average prices, it's about $190 right now, the average, per capita spending per person. We think this pretty much goes to about $300 over the course of the next 4 to 5 years.
And nobody does it better than Disney. I mean, you got this little wristband, so you're not even physically taking out your credit card.
So easy to tap
and
go.
you just tap and go, and it's just
and you don't see it until you look at your credit card statement in like a month or something.
Exactly.
Right.
So nobody's better at it than Disney. All right, so Keith, let's step back on the Disney story here. The theme parks, we got a good handle on that. Where are we in terms of profitability of the streaming business? Is this still a big headwind for the company and the stock?
Not anymore, Paul. So the turnaround has finally taken place. It happened last quarter, and we are actually going to see the streaming business now become a major contributor to actually the bottom line. So far it has been a huge drag. There were almost $4 billion in losses just a few years ago, but now we're seeing that it's breaking even. It's going to become a positive profit contributor. Why? Because they're increasing prices. You're going to see a huge jump in your Disney Plus subscription come October 17th. They're cracking down on password sharing. That's something that they're just copying from what Netflix did. Again, that should lead to a nice bump in their average revenue per user. And then they've also introduced the advertising tier. And so advertising, which is already a pretty big business for them, they're really going to double down on that as well. So they have multiple levers that they're pulling now as far as the streaming business is concerned.
How is the stock trading? Is the stock trading encompassing all of this? Do you think it's undervalued, overvalued? I know you guys don't give actual valuations on the equity market for that, but I'm just curious as to see in terms of relative valuation.
I think in terms of relative valuation, it's definitely a little bit undervalued right now. And I think that's just because, we kind of have to wait for higher visibility in terms of the theme parks. So they have clearly said that the theme park business is going to be under pressure through most of fiscal 2025. So until we see like a nice ramp up in growth with the parks, I think we're going to see that somewhat of a negative sentiment and somewhat of that sustained pressure.
Boy, because it seemed for a while there, once they make that turn, that's when you want to dive into the stock. But I guess that's at a time where maybe the U.S. consumer's, a little bit weaker on the margin, and that's going to hit the theme parks.
Not compared to what you were saying or the last couple of days.
Exactly. Yeah, I was spending like crazy. They're going to have a blowout quarter this quarter, Geetha. You can call it right now. All right, Geetha, thanks so much for joining us. Geetha Ranganathan, she is a U.S. media analyst for Bloomberg Intelligence. She covers all that stuff. Disney, obviously a huge name in that sector. And again, investors have been waiting for the turn in profitability for the streaming business. And it looks like they're at that point making that turn there to profitability. So we'll see to what extent they can ramp it. I mean, you look at the margins, the profit margins at Netflix, and I don't think Disney's saying they're going to get to those profit margins, but if they can get to something close to that, that's a lot of cash flow and a lot of earnings here for the company. So, but the stock, again, it's $167 billion market cap stock, but it's only up 2% year to date, and only up about 10% over the trailing 12 months. Badly trailing the market there, and that's been a real concern for media investors. The sector, tough for that sector to work if Disney's not working.
Yeah, absolutely. Taking a look at all of that as Hurricane Milton continues to bear down on Florida with, quote, house-toppling winds. All right, coming up, we're going to stay in the market here. Kim Forrest is founder and CIO of Boca Capital Partners. She'll be joining us with her take on the market. Plus, we are going to bring you Citadel Securities CEO live panel with Shonali Bassick. We'll bring you that from the Citadel Securities Global Macro Conference in New York. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at records for the U.S. stock market right now, with the S&P 500 index trading at 57.77. The old record 57.62. Right now, we've got the S&P up by about 0.5%. The Dow is advancing 267, up 0.6%. Nasdaq up 74, up by 0.4%. On top of trading at a record, we are looking at the best level of the session right now on the S&P S&P 500 index. 10-year yield 4.04% with a 2-year 3.99%. Gold down $6 the ounce, down 0.2%. And West Texas Intermediate crude, a further retreat there, down 0.8%, 73 even a barrel on WTI. Traders are gearing up for that key inflation data tomorrow morning. We've got the S&P again trading at a record. Big tech once again leading the charge. Generac Holdings is running low on portable backup generators after Hurricane Helene and other recent storms knocked out power for millions of Americans. Generac CEO says many of the company's portable products sold out after Helene tore through the southeast. Generac shares right now, they are trading higher today. We got Generac up by about 0.2%. So again, recapping here, stocks are gaining. S&P up 26, up 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alex Steele and Paul Sweeney, we are live here in our Bloomberg Interactive Broker studio in New York City. We're also streaming live on YouTube, so you can head over to youtube.com, search Bloomberg Live Radio, and that's where you'll find us. Charlie was just calling out the tech stocks. I was just looking at NVIDIA. That is within a couple of points of its all-time high again. So there was a little bit of a sell-off there in some of those AI names, but they seem to be coming back a little bit. So see what's going on there. Kim Forrest joins us. She's a founder, and she's a chief investment officer at Boca Capital Partners. She's out there in Pittsburgh, and longtime technology analyst, really has some good views there. And I'd love to, Kim, I'd love to get your thoughts kind of on this AI trade. It had a little bit of a lull there for a while, but it seems to be coming back. How do you think about it?
Well, it's generative AI is the thing, and it has been the thing for, I don't know, maybe 24 months now. It seems like forever, but here we are. And every once in a while, people go, uh-oh, wait, it's wrong sometimes.
Right.
And then they go, wait, like it doesn't solve any problems, but we know it's cool, so should we keep funding it, as investors? And the answer seems to be yes. But there are fears, and I think rightly placed, that we don't really know how big this market is. We keep being told that, data centers are going to take over large swaths of America. I don't know that I believe that. I think my biggest problem with generative AI is it's unclear about what problem it's solving. And then that leads to the question, how much would you pay to solve this problem? And I don't have answers to either one of those. And I think that's what makes a lot of investors uncomfortable.
Well, maybe given that lack of comfort there and maybe some of the finer points of the AI story, is technology still a sector that can lead the broader markets higher like it's done for much of the last, 10 or 15 years?
Absolutely. I'm a huge, even though I'm like a little bit of a doubting Thomas here on the whole generative AI, I used to work in AI, and I know the power of the problems that it can solve. And they're much smaller than somebody talking to a computer and say, design me a new car, computer. Like, that's not a thing. Ridiculous, just one sentence problem solving. You know what I mean? But I do think that productivity is the thing that drives businesses to invest, and that drives technology companies to try to solve those business problems. And at the end of the day, that is what drives technology. Although people like to use it, it's fun, it's interesting, but they don't pay nearly as much as businesses do to run technology.
All right, Kim, we've got a Federal Reserve that is in a rate-cutting mode. Maybe there's some debate about how far and how quickly they do that if you look at the bond market. But earnings, I think they still matter, and JP Morgan is going to really kick things off on Friday. What are you looking for out of corporate America in this earnings season?
Sure. Well, October is really the twitchiest earnings season because a lot of companies, didn't know if they were going to make their quarter because of the vacation schedule of everybody. So that always adds a layer of uncertainty to this time. But that being said, I think the bar was set low enough. I haven't seen very many, if any, pre-announcements from companies. That's still ongoing as they tally things, and the SEC forces a company to give meaningful material information to its investors. So we always look for that. But I don't see very much in the way of pre-announcements. Now, what we're going to now look at is what do companies see going forward? I think there are some questions about whether or not this economy is truly as strong as some of the numbers forecast. So that is what we're going to be looking for all season long, all earnings season, is do the companies see the next 6 months to a year strong, weak, or somewhere in between?
Do you think it's going to be Mag 7 or the other 493 stocks this time?
Oh my God, I wish Mag 7 would just take a break. Sometimes, oh gosh. But I think Mag 7 still has that generative AI magic going on. But there is room for other companies, especially in a declining rate. The smaller companies get bought by larger companies. And that's really been in quite a lull because of the high interest rate environment. Now that companies know that or have a pretty good idea that the interest rates are dropping, they are going to go back into the shopping mode, which is always exciting for me because I own some of those smaller names.
So small cap, again, we've heard it that maybe in a lower interest rate environment, they will do better on a relative basis. Certainly there's valuation there. Are there certain sectors on the small mid cap that screen well for you guys?
Well, there's technology. That's always good.
Yep.
And, one of our smaller companies is getting bought by Synopsys. So that's really the key here is a small company that can fit into the larger company's product suite or expand its total addressable market. That's what you're looking for in a takeover candidate. And I think just about every industry has, some smaller companies that could get bought by larger companies.
You like?
Like?
Yeah.
Oh,
I mean, not
golly.
the, okay, you don't want to say individual names. Just give me what are the sectors where that might make the most sense?
Well, there's banking. There's always banking, right? There's too many banks. There's that. Technology. There's lots of point products that would go nicely into a larger company's suite of products. Retail, not so much. God knows we love to talk about retail, but I think that looks pretty good for right now. Maybe industrials. Again, point products going into a larger company to allow that larger company to satisfy its customers with a broader suite of products.
Right.
So those are the key areas that I look at.
All right, Kim, thanks so much for joining us. Always appreciate getting your thoughts. Kim Forrest, she is the founder and the Chief Investment Officer at Boca Capital Partners. They are out there in Pittsburgh, PA. Right now, we're going to dip into a discussion featuring Peng Zhao. Citadel Securities CEO speaks with Bloomberg Television anchor Shonali Basak, and they're at the Citadel Securities Global Macro Conference in New York. Let's take a listen.
What are the biggest risks about integrating AI, particularly generative AI, into a business, particularly a financial one?
Yeah, I mean, I think banks with a lot of retail customers talk a lot about privacy, talk a lot about liability, right? When what I heard at one of these conferences was, hey, if I'm one of the large banks and I use, say, OpenAI to provide advice for my customer, whether the algorithm has go through a period of hallucination or went down, it's going to be the large bank's own name that ends up on the top news on Bloomberg, right? And so I think firms are thinking a lot about that. But the firms that are thinking about that are looking for ways to navigate through that, are already ahead in many of these instances. So I think we will see, at least for this next period, an increased adoption of using AI as productivity tools internally. We're still some distance away, both from a technological perspective, but also importantly from a regulation and even legal perspective until we have further clarity and perhaps really a few of these cases that would test our core system and regulatory system in terms of what is going to be okay, what is going to be acceptable when it comes down to actually bringing generative AI technology all the way through to the end user. We're still some distance away from that.
I want to get into what would kind of break down those limitations, what it would unlock. But before that, you mentioned OpenAI. Another thing about a year ago is many financial companies would say we are hesitant to work with a third party because of the liability, because of the risks. And more you've seen more financial services companies work with OpenAI, work with Anthropic, what have you. Are you working with OpenAI and other players as well?
Yeah, we use we partner with most of the top providers. OpenAI, I think from our perspective, it's they've been valuable partners, and then the other part of this is it's crucially important for us to be informed on the cutting edge. Even if not every upgrade and every release every week is necessarily going to lead to real changes for us internally, we want to be on that release note. We want to be examining that. We want to stay up to date on what is becoming possible, and that's moving every week. That's moving every week.
What is becoming possible? What does working with OpenAI do for you that you wouldn't have been able to do before?
I think some of the, there's a lot of different examples. I think some of the key workflows that was viewed as uniquely possible if you had a lot of certain type of talent are now being transferred from a heavily high value human labor intensive part of the workflow to being heavily automated. Even things like debugging, right? Things like, hey, code reviews. Those were things that consumed a very large amount of high-value developer resources. Today, that's being somewhat replaced. Even in core areas of our model building, I'm not going to get into a level of details, there's certain part of the workflow that consumed a lot of our most valuable researcher time are also becoming much more automated. So again, I come back from the perspective of less revolutionary change from the product offering perspective, but more of a change from a productivity perspective. If I can take this group of 30 of the brightest, smartest, most innovative researchers in capital market and get a 20% productivity gain out of these 30, that's like hiring 6 international math Olympiad gold medalists, just like that. And I'll do that every day.
Incredible. So what does this mean in terms of your performance as a company? It's been rumored forever that Citadel Securities would seek an IPO at some juncture. And so is this helping you kind of grow your margins much faster into a moment like that?
So there's 2 things. Well, first of all, we'll make sure Bloomberg is well informed if we ever seriously consider IPO.
Are you seriously considering an IPO?
No. And you all will read it on Bloomberg first, I'm sure. But putting that aside, I like how you slipped that in there. But putting that aside, I think it goes in both ways. I think for companies, there's certainly, I would say there's a risk for firms to not stay with the speed of innovation. And it's not necessarily generative AI. As I said, companies are spending time and resources in figuring out how they can leverage more automation and technology in increasing their productivity to stay on that frontier, right? And the firms that cannot keep up in doing that, not only will they not win, they will lose. Okay, and I think the top firms in every field, including our field, are spending a really high quality time being very intentional in thinking about where they're going to allocate their resources to keep up with that innovation. At the same time, I also believe firms like ourselves on the other end of this will win based on our understanding of the market, based on our understanding, yet again, on what are the most important and most valuable problems our clients want to solve and that market want to solve. We are building better tools, but those better tools will not be nearly valuable enough unless we use them to solve the most valuable problems. And we do need those humans, going back to that, to be in these discussions with our clients, to be in the meetings, studying the market, such that we start with solving the most important problems with these better tools.
So it's not just the new hot upstarts that you're working with. Last year at the same conference, you spoke with alongside executive at Microsoft. You work with Google as well, I believe. You look at news like today, and you look at the U.S. government looking to break Google up. I'm very curious, as someone who is a client, what you think about that, and if that changes the dynamic of these large tech companies in the U.S. and what they're able to provide to people.
Well, thank you for asking that. We've had a long-standing partnership with firms like Google and Microsoft, just to name two firms among many of our partners. And from that perspective, I don't believe our working relationship with these firms will change, regardless of whether Google Cloud is part of a bigger umbrella or its own standalone company, right? It is the people, the engineer, the business partners that enable these relationships, and I continue to bet on that being fruitful and productive. Taking it from the other perspective, as the largest designated market maker on New York Stock Exchange, as someone who just took this American aerospace company that we mentioned earlier, IPO last week, with a lot of excitement and pride, we need to see more IPOs, okay? And we've seen way fewer IPOs than we used to. And the leading reason companies are no longer going public is, on the one hand, they find it easier to raise capital privately. On the other hand, the negative side effects of being a public company as a result of regulation like the ones you're mentioning that's happening to Google right now, is giving people longer and longer pause, right? Until that changes, it probably also means next time when you try to ask me, when you ask me whether we're going IPO or not, the answer will continue to be no. So, so from that perspective, we remain concerned about the overregulation and this negative attitudes towards corporate America.
I hadn't thought about it that way. Yes.
All right, that was Peng Zhao, Citadel Securities CEO, speaking with Bloomberg Television's anchor Shonali Basak from the Citadel Securities Global Macro Conference in New York, talking some global macroeconomics and global finance. So good to get a few minutes of their discussion. All right, let's reset the world here, and we do that with one Charlie Pellet.
All right, I think everyone with Paul Sweeney, we've got Dow, S&P, NASDAQ all advancing. We are looking at the best level of the day for the U.S. stock market, just about that level now, with the S&P up 30. That is a gain of 0.5%, 5781. The Dow also at a record 42,378, up almost 300 points right now, up 299, up by about 0.7%. The old S&P record, by the way, 5762. The old Dow record at 42,352. Right now, the Dow at 42,392. We've got NASDAQ up by 87 points, up by about 0.5%. 10-year, 4.04%, but the 2-year, 4.00% right now on the 2-year. Gold is falling 0.3%, 26.14 the ounce, and West Texas Intermediate crude down 0.4%, WTI 73.32 a barrel. Rio Tinto Group is buying Arcadium Lithium in an all-cash deal, valuing the U.S.-listed miner at $6.7 billion, expanding its grip on the battery field and stepping back into the M&A fray with its biggest deal in 17 years. Rio down 0.5%, but shares of Arcadium Lithium, they are surging now by 31%. Recapping, stocks higher at a record. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
And Charlie Pellet, following up on that story there, Rio Tinto, for our investment bankers out there in the audience, financial advisor to Rio Tinto, JP Morgan, financial advisor to Arcadium, UBS. My banker buddies are getting paid out there. Charlie Pellet, thanks so much. We appreciate it. Alex Steele, Paul Sweeney, we're live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube as well. So go over to that internet thing, go youtube.com, search Bloomberg Local Radio, and that's where you'll find us. All right, sustainable aviation fuel. I didn't know it was a thing. Alex knows it's a thing. I did not know it was a thing. Fortunately, we have people actually do that stuff here. Anna Davies is one of them. She's head of renewable fuels at BNEF, joining us live here in our Bloomberg Interactive Broker studio. Anna, I just use jet fuel. I throw it in my jet and I go. What is sustainable?
He doesn't have an actual private jet, by the way.
Okay. Just in my mind. What is a sustainable aviation fuel? What is it, and is it being used, and how well is it being used these days?
So, hey, nice to be here. What is sustainable aviation fuel? You use it exactly like that. You can throw it in your private jet and go, and it'll work just the same way.
Really?
It is, in its simplest form, molecularly pretty much identical to fossil jet fuel. The only difference is it doesn't come from fossil fuels. So mostly it comes at the moment from biofuels. So instead of having crude oil, you're using a bio oil. So something like soybean oil or used cooking oil, the leftover oils from your deep fryer.
Which would be the issue now, supply or demand, when it comes to SAF?
That is a very good question, because everybody says we need more, there's not enough produced, there's all this demand that we need to replace fossil jet. But we have seen both suppliers and actually airlines kind of roll back their targets. Right now, the problem is it's expensive, and nobody is really willing to pay it. So we see buyers not quite willing or able to step in to take it. And as a result, we don't see suppliers able to secure financing to build their facilities. So
that's a chicken and the egg type of thing. How do you think you solve for that? Is that bringing the cost of production down? Is it trying to stimulate demand somehow?
So we anticipate the cost of production. At BNF, we try and calculate and model out
you
production.
Guys are all about data.
Exactly. And we do not see the cost coming down to reach parity, really, like current jet fuel prices. It's always going to be a couple orders of magnitude above. So the real crux that's needed is policy. You need to have a policy push to either incentivize its uptake or force it. And we're seeing both of those policies developing.
Which basically what that means is that you have to subsidize the difference between SAF and regular jet fuel. And what the IRA did, it was really helpful in incentivizing the supply, but not the demand side of it. How close do you think that is right now?
So the IRA, the Inflation Reduction Act, does offer a tax credit for sustainable aviation fuel production, which does help to bridge that gap. There's still a lot of uncertainty as to what will qualify. You need to have a certain amount of types of feedstock in order to bring your actual emissions reduction down. That's a big issue in the market. It also is not only in place for a couple of years, which isn't going to help finance a 30-year facility. You see places like Europe taking the opposite approach, where they're just mandating blending in. So they're saying airlines and airports have to blend a certain amount, and that's going to ramp up over the next few years, sort it out, figure out the cost. And then you see places like Singapore, which is actually imposing a levy on airline tickets and saying, okay, we think SAF is going to cost this much in order to blend in. We have blending targets. We're just going to put an additional cost on airline tickets in order to cover the cost of SAF. I mean, we'll see what works.
In theory, that makes sense, right? Like you just pass it down to the consumer, but it does point out that any energy transition that you can do will eventually be then passed on to the consumer.
Consumer or taxpayer, yeah, probably.
Interesting. So what the U.S. airlines, all right, here I'm just reading some of your research here. So BNF tracks airline net zero commitments and sustainable aviation fuel commitments, and currently 44 airlines, accounting for just under half of jet fuel consumed globally, have some SAF target, usually 10% by 2030.
Yeah.
Is that good enough?
Well, it's a target.
Okay,
so the question is, will they hit those targets?
Yeah, is it real?
Can they do that? And that's where we are starting to see some airlines procure SAF volumes, like United procures a lot. If you fly on, say, United out of San Francisco or LA, chances are there's some SAF in the tank.
Can they blend it?
They can blend it one for one. That's one of the beautiful things about sustainable aviation fuel.
Well, not only that, you can just like easy replacement. Like you can just take the jet fuel out and put it back in, versus if you did a hydrogen plane or some other kind of plane.
Yeah, so you don't need new tanks or new aircrafts. You can blend it up to 50% currently is the regulatory.
Who produces this stuff?
It is currently produced in very small quantities. So right now, less than 1% of all jet fuel is sustainable aviation fuel. So we're talking very small volumes. It's produced, a lot of oil and gas companies and refiners are in on this space. So Neste, there's a company called World Energy and one called Montana Renewables that are producing at the moment. We're seeing P66 and Valero through their partnerships with Darling Ingredients.
Those are regular refiners.
So does like Valero, who does jet fuel today? Where does that
a lot
go?
of the refineries. So if you think of a refinery,
so you need to go talk to the refinery and say you guys need to put out more.
And a lot of them are looking at it because a lot of the process at the moment is similar. You basically, instead of taking a crude oil, you take a bio oil, you put it through a refinery and get sustainable aviation fuel. So you can actually convert some existing oil refineries to take bio feedstocks and therefore make these biofuels. So we are seeing them active.
What about the Okay, so a different question. How do you think this industry develops? And where does the strength develop?
So a lot of this is policy-led. We are starting to see a lot of policies support it, though, because aviation is one of the crux. You can make these types of sustainable fuels into a whole lot of things. You can make diesel molecules, you can make methanol molecules, petrochemicals. But aviation is the industry where there aren't any really good alternatives, especially if you're looking at like a 2050 SAF or net zero target. Because hydrogen aircraft, electric aircraft, it takes decades to get those off the ground. It takes decades for fleets to roll over. So if you really want to decarbonize aviation by 2050, you're going to need to decarbonize the fuel that they're currently using. So this is the area where we're seeing a lot of policy start to move. I've mentioned a few of them. We're starting to see some interest from different producers. We're starting to see a lot of investment going into this because everybody assumes the market will get there. So for instance, there's a different way of producing it where you take green hydrogen and captured carbon dioxide to make the fuel. That's popular because you don't have the food versus fuel issues of a biofuel. Just earlier this month, we saw Brookfield invest over $1 billion into one of these e-fuel facilities.
I need to go check out one of these. Where are these things? Are they just like in Texas and Louisiana, where all the other
California.
California.
A lot of the fuel is sold in California, and a lot of the old refineries are being converted there, but they are being produced everywhere. It depends on where the feedstock is, so you can see a lot of feedstock in the Midwest. A lot of the production's coming out there. We're starting to see e-fuels, which take green hydrogen. They need to be near cheap renewable energy. And so you'll see a lot of these.
And is this fuel as efficient as carbon, the regular fuel? Because I don't want to be 35,000 feet in the air and then the engine.
You're as reliable as what you're
as
asking.
reliable.
Yeah,
Thank you.
Yeah, so it has to produce. It produces Jet A spec fuel. There are questions if you had 100% SAF in your tank. Actually, a lot of the fossil jet fuels have some aromatics that end up in the jet fuel stream, and that actually helps with seals in the engine. So they're testing that out, but we don't have the quantities produced that you're anywhere near 100% these days. And in general, you could think of it as exactly the same as jet fuel.
See, isn't she awesome?
She is. I mean, all these people we haven't had like a clunker yet out of any.
No,
They're all
but
good.
I've known
They're
her for
all
a long
smart.
time. She
Okay.
used to cover literally everything at Bloomberg Intelligence. Like
Everything.
no, not BNF.
Yeah.
It was like oil, it was gas, it was all the things. All right, Anna, it was good to see you. Thanks so much, Anna Davies, head of renewable fuels over at Bloomberg BNEF. It's where we get all the data that you need to know about the energy transition. Honestly, from oil to gas to hydrogen, we get it all for you. All right, coming up, we are going to talk to Dasha Afanasieva. Gonna have to work on that.
Afanasieva.
Well,
no,
okay.
does that work?
All right,
I've
look
been
at
practicing
you.
this one.
You have? Okay.
Exactly.
So the Bloomberg Consumer Good Reporter on the big take story today, which is Perrier contamination woes add to $300 billion in the sector's hurdle. I didn't even know that Perrier had contamination woes.
Yeah. That's
Also,
not good. It comes out of the ground, right? It's got to be.
Well, me, but it's sparkly.
Yeah.
It has it's Perrier. It's fancy and stuff like
I'm
that.
still waterproof.
I'm still tap water, man. All right, look at the markets here. We're around the highs of the session here for all the major indices. This is Bloomberg.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Alex Steele, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, it is Hispanic Heritage Month, and every day at this time, we are celebrating significant moments in Hispanic heritage. Now with your installment for October 9th, here is Bloomberg's Sebastian Escobar.
On this day in 1952, baseball legend Roberto Enrique Clemente Walker began his professional career when he signed with the Cangrejeros de Santurce, a franchise of the Puerto Rican Professional Baseball League, at 18 years old. 3 years later, Clemente made his MLB debut with the Pittsburgh Pirates, eventually playing 18 seasons with the team, winning 2 World Series titles, collecting over 3,000 hits, and becoming the first Latino American player to win a National League MVP and to be inducted into the National Baseball Hall of Fame. Clemente's life was tragically cut short when a plane he chartered to bring earthquake relief supplies to Nicaragua crashed on New Year's Eve in 1972. Clemente's remarkable contributions to American culture continues to inspire the next generation of Latinx athletes. That's today in Hispanic Heritage. I'm Sebastian Escobar, Bloomberg Radio.
All right, Sebastian, thank you so much. We appreciate that. I barely remember Clemente when I was a really little kid, but I remember just this crazy good outfielder with this crazy good arm. So heck of a player there. Let's go to the big take story today. It's all about Perrier. We've all had Perrier, but apparently they got some issues over there about getting the quality of the water there. Dasha Afanasieva joins us, Bloomberg consumer goods reporter, on the big take story. Here we go, entitled Perrier contamination woes add to $300 billion sector's hurdles. Dasha, thanks so much for joining us here. Talk to us about your story here. What's going on with our good friends in the south of France?
So, hi. So at the start of this year, Nestle had to admit that it had been illegally filtering its mineral water in France, and in particular Perrier. And the reason why it's illegal is because mineral water under French law and actually European law, you shouldn't really do much stuff with it. It's supposed to be quite natural, whereas they were using charcoal filters and using UV filters. So they kind of come clean on that because there's a leaked report that forces them to. And then a few months later, there's another leaked report that says, well, there's fecal contaminants and pesticide contaminants and PFAS contaminants in the source, the Perrier source. And then after that, the other thing that happens is that they have to suspend a well because of contaminants. So it's all kind of wrapped up in trust issues and contaminants. But I'd like to highlight no food safety issues and no health issues.
So how does this evolve? Like, how does Perrier fix it? Like, how much it's going to cost? All that good stuff.
Yeah, Perrier found out back in 2020 that, well, it was doing this. It was doing the legal filtering, but a new boss came in 2020 and realized they were doing this filtering and then brought in a program to modernize the plant so you wouldn't have to do it anymore. And that whole time they were in conversation with regulators, they say, to upgrade production and to also get everything shipshape. And they invested in modernizing the plant, something to the tune of 150 million euros. So they're saying now it's all good, nothing to see here. But that one well out of 7 is still shut. It's still suspended, I should say.
And this water, this is big business for France. Reading your article today, Dasha, the world's biggest bottled water exporting country, that'd be France, has fought hard to preserve the integrity and identity of its water with an eye on jobs and growth. The industry contributes 1 billion euros each year to France's external trade, and directly or indirectly employs about 38,000 people. So this is big business here. And I would think the brand value is what it's all about here. So they have to be careful, don't they?
I think it is about the brand value, and Perrier has had issues with this in the past, decades and decades ago, when there was a benzene contamination. So it did this massive recall, a global recall. So it has form, and this very product hinges on its premium status and on this idea that it's sort of pure and better than tap water. So you have to preserve that in the eye of the consumer, and maybe the individual consumer might not care how you're filtering it, but over time these sort of this trickle, if you will, of news definitely tarnishes or can tarnish the brand potentially.
How big is a business is this? Like, I got a soda stream at home, you know, we bubble up our regular old New York tap water, but talk to me about the industry at large.
It's not a huge business for Nestle. For Nestle, it's only 3.5% of revenue, but the industry globally is around 306 a billion and growing around 4% a year. So it is rather large, but as I say, not huge for Nestle.
So, I mean, I guess if you're thinking about a green economy, you ask a good question here in your article. Does it make ecological sense to transport millions of bottles of water, about 97% of them made from plastic, across the globe instead of sourcing it locally? How do the French think about that?
Well, the French would say our mineral water is super special and our amazing terroir. It's a bit like with wine. You know, it comes from this incredible terroir, and we have the minerals, and we have this heritage of producing it, and that's the root of Perrier's marketing. But what Perrier's done to protect its future revenue streams is they've said, well, we'll have this whole other product called Maison Perrier that they can filter however much they want because it's not called mineral water, and it's now fronted by Emily in Paris, actor Lily Collins, and it still travels to the US. So even if you're making these, if you think the terroir, French terroir is so special, if you're filtering the water, you sort of think, well, why not just get the water in the US and filter it? Right. And the reason is marketing.
All right, we appreciate it, Dasha. Thank you very much, Dasha Afanashvieva, joining us, Bloomberg consumer goods reporter on the Bloomberg Big Take. Again, Perrier contamination woes at a $300 billion sector hurdles. That wraps it up for me and Paul on this Wednesday. Coming up, you got Joe Matthew with Balance of Power on a real update on the equity markets here. This is Bloomberg. Happy Wednesday.
Politics to the world of business. This is Balance of Power. Live from Washington, D.C.
We are just hours away from landfall. Welcome to the fastest show in politics as Hurricane Milton barrels toward the Gulf Coast of Florida. At Category 4 now, forcing hundreds of thousands of people to evacuate, of course. And we're going to get the latest in a moment from David Baker, Bloomberg climate and energy reporter, with landfall expected around midnight tonight. We'll measure the impact this storm is having on the campaign as J.D. Vance takes to an op-ed to criticize the administration's response to the last hurricane. And more with our signature panel, Rick Davis and Jeannie Shanzano, with us for the hour today. And we'll turn to the swing states with new ratings on the Senate race in Wisconsin. Important details ahead, courtesy of Jessica Taylor at the Cook Political Report. So let's wind up the band and start, as always, with a look at Wall Street. A little better today. Charlie Pellet has the numbers for us in New York.
Indeed, Joe Matthew, perhaps putting it mildly, we are looking at records for the Dow, a record for the S&P 500 index, stocks pushing higher, green all over the place right now, right to the numbers, with the S&P up 35, 57.86, up 0.6%. It is a Fed Wednesday, 2 hours away from the latest FOMC minutes. The Dow up 350 now, up 0.8%, while Nasdaq higher by 91, a gain there of 0.5%. Tech stocks ripping higher. We've got the Nasdaq 100 index up by 0.6%. 10-year 4.04%, with the 2-year that's currently yielding 3.99%. Gold retreating 0.3%, 26.14 the ounce, and West Texas Intermediate crude down 0.5%, 73.19 a barrel. Traders gearing up for key inflation data tomorrow morning, sending stocks to records. Wall Street's also looking ahead to that CPI report and then bank earnings on Friday. There's also the backdrop of the November election and the potential implications for investors. Tiffany Wilding is an economist at PIMCO.
We have an incredibly big election on the horizon here, with policies with either candidate that could look very different. You know, of course, the deficit we think is really the real loser here, with neither candidate likely to do anything about the longer-term trajectory of government debt. But I do think that there are bigger differences within trade policy, and that will matter for markets.
IMCO's Tiffany Wilding was interviewed this morning on surveillance on Bloomberg television. The Justice Department is considering asking a federal judge to force Google to sell off parts of its business in what would be a historic breakup of one of the world's biggest tech companies. Right now, Alphabet shares on an update for the rest of the market. We've got Alphabet down now by 1.5%. So again, recapping, stocks are pushing higher. S&P at a record 5786, now closing in on 5,800, up 34, a gain now of 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Once again, your host for the Wednesday edition, here he is, Joe Matthew.
You got it, Charlie Pellet. Thank you, as ever. Nice to see some records, and we'll get back with Charlie a little bit later on this hour, keeping tabs on the markets for us, always on Balance of Power. So, yeah, welcome to the Wednesday edition here on Bloomberg Radio, on the satellite, and on YouTube, where you can find us right now by searching Bloomberg Business News Live. I'm Joe Matthew in Washington, and we're just about 12 hours out now from landfall as we track Hurricane Milton on its way to the Gulf Coast of Florida. Just 13 days now after we did the same thing with Hurricane Helene. The president and vice president, Joe Biden, Kamala Harris, are being briefed right now, as a matter of fact, on preparations for Milton, on recovery efforts from Helene. And we are going to hear from Joe Biden later today, just to set the baseline on where everybody's at. 5:30 p.m., that'll happen in the late edition of Balance of Power. We'll bring you remarks from Joe Biden as he addresses the nation on this day. We're expecting the storm to land. He'll be holding forth from the Roosevelt Room. Karine Jean-Pierre will brief before that happens. And the candidates are on the road today. Kamala Harris heads to Vegas tonight. Donald Trump in Scranton, Pennsylvania, Joe Biden's hometown. Also in Reading, Pennsylvania, later on. He's got a twofer today in the critical swing state. J.D. Vance, fresh off his op-ed about the storm, criticizing the administration, is in Arizona, Tucson for a rally, Mesa later on for a town hall, and Tim Walz is also in the swing state of Arizona. He's with Ruben Gallego, of course, running for Senate, and a man named Jim McCain. Interesting lineup today. So let's get to the story at hand, and that's Milton, of course. We're at Cat 4 now, and just barely underneath what is a Cat 5 storm on its way to west central Florida overnight tonight. We're talking about a 15-foot storm surge. We're talking about 6 to 18 inches of rain, winds topping 150 miles an hour. Governor Ron DeSantis back in front of people for a storm briefing earlier today in Florida. Here he is.
Hurricane Milton is still a major, very strong hurricane. It's currently a Category 4 hurricane with maximum sustained winds of 155 miles per hour. That is just a whisker shy of a Category 5. And while there is the hope that it will weaken more before landfall, there is high confidence that this hurricane is going to pack a major, major punch and do an awful lot of damage.
Undeniable at this point. DeSantis has activated thousands of National Guard troops standing by to respond. Of course, hundreds of thousands, if not, maybe we learn a couple of million people have evacuated the storm zone already. FEMA is already there, of course. We talked to Craig Fugate, the former administrator, last evening on Balance of Power, suggesting that if there's any silver lining here, and I don't mean to be too cute about this, is a terribly devastating storm that is about to hit Florida. But the fact is, FEMA is already there. The equipment, the people are there from Helene, and will hunker down and be ready to respond as soon as the storm passes. David Baker covers climate and energy for us here at Bloomberg and joins us now with his view on this historic storm. David, it's great to have you with us in our San Francisco bureau. What are you going to be watching as the storm makes landfall tonight?
Two main things. We're looking for the track, exactly where it strikes land, and we are looking at that wind speed. Now, the wind speed has been moving around quite a lot over the last day. It's grown at times, dipped at times, but it's still going to stay in major hurricane territory. It's not going to drop out of that category at all. And it's pushing a lot of water right towards the west coast of Florida. What we're really looking for in terms of landfall is whether or not it lands north of Tampa, which would be the worst case scenario, or south of Tampa, which would be bad, but it might spare the city some of the damage they'd experience if it lands north. Because if it comes in just north of the city, the wall of water that it's shoving at the coast will go right into Tampa Bay, and that means a lot of property damage.
Understood. So our viewers on YouTube are looking at a map of Florida as you're talking here, David. What would it mean then if the storm came in south of Tampa? Is that dodging a bullet or still massive destruction, just on a slightly smaller scale?
Unfortunately, it's probably the latter. I mean, you're still going to see a lot of flooding, a lot of destroyed or damaged homes, and that the destruction could go very far inland as well. We are most concerned with this hurricane about the storm surge and the flooding along the coast, but it's a big storm with very strong winds strong enough to actually just knock down your house unless you've got something very strong in terms of your own home. So that's going to extend well into the state, not just along the coast.
What are the chances of this strengthening back to Cat 5 since it's so close to that level, David? And what's going to happen after it makes landfall? These models show the storm crossing the center of Florida and touching the East Coast. What form or what strength would we be showing by then?
So at the moment, it looks like the storm's top winds are going to weaken a bit before it strikes land, weaken a bit more than they are right now from what they've done so far. We don't at the moment think it's going to land as a Cat 5. And in fact, there's a possibility it will be back down to a Category 3. But I mean, Category 3 is still considered a major hurricane. It's not a small storm. Right now, it's getting kind of beaten up by some wind shear in the upper atmosphere that's knocking down those top speeds a bit. But it is still a very powerful storm with a lot of water in front of it. It's expected to go across the peninsula and reemerge into the Atlantic. Now, how organized it will still be at that point is a big open question. If it's able to regather strength, we could be dealing with problems with this for a little while.
I'm really glad you could join us, David. I'd love to check in with you tomorrow if you're still at the desk. David Baker, covering climate and energy for Bloomberg, and our storm expert today on Balance of Power. This is a scary moment. We'll be tracking, of course, the arrival of that storm and the response to it, knowing as well that there is, in some cases, an unfortunate political side to this, which we'll be talking about with our political panel a little bit later on this hour. Many thanks to David Baker. Producer James tells us, by the way, Tampa officials are holding an emergency management briefing right now as well, and we'll let you know if any additional news comes out of that with the closing window here, the closing window of opportunity for people to evacuate. As we turn our attention to politics and the swing states, again, this is where we find our candidates almost every day, unless Donald Trump is throwing a rally at Madison Square Garden, which is one of the more recent headlines. But yes, it's Pennsylvania, it's Michigan, it's Wisconsin, where the Cook Political Report plants a flag again today. Jessica Taylor writing that Wisconsin is seeing its Senate race shift. Cook has gone from leans Democrat to a toss-up in what is a narrowing race here, now a 2-point race, depending on the poll that you're looking at here. This is Senator Tammy Baldwin versus Republican challenger Eric Hovde. And Jessica Taylor is with us from the Cook Political Report right now to talk about why. And I wonder why this is narrowing to such an extent here. Jessica, welcome back. This was a 7-point race in August.
I think that we're just seeing a natural tightening in a lot of these races. Wisconsin is probably the closest to an evenly split 50-50 state as we have in the country. These races are just always close in Wisconsin. The 2022 race with Ron Johnson, the Republican winning there, was decided by just 1 point. What we are seeing across particularly some of these, blue wall states is that Republicans were underperforming where Trump was. We're seeing that sort of Republicans coming home. We saw in our poll, our Swing State Project poll, which again found that Tammy Baldwin, the Democratic senator there, was ahead by 2 points, 49-47 over her Republican challenger. Since August, we had seen an 11-point shift among independents, along with a slight shift among Republicans toward Hovde. And we're seeing that sort of Democratic candidates were running more ahead of Harris. I think that those numbers have sort of become more in line with the Senate races. ultimately what we see is that these Senate races are just very closely aligned with the presidential results in the state. Remember that in 2016, every single Senate race went the same way as the presidential result. And in 2020, only Susan Collins of Maine managed to win re-election, outrunning Trump by 7 points, even as Biden won that state. So Wisconsin, always a very close race. We're seeing that tighten. Hovde is spending millions of his own money. He's up to about 20 million so far. And Democrats had the early spending advantage. That is now narrowed. Republicans even have a slight edge when it comes to spending here in these last few weeks.
Well, I wanted to ask you about that. That's really interesting. To what extent is this tightening just the natural course of politics up and down the ballot? Or, to your point, the spending, the massive spending by Hovde of his personal fortune?
I think it's a little bit of both. You know, Hovde spent early, but his campaign got off to a little bit of a rocky start. His ads weren't great. He was featured in them. I think that didn't seem to didn't seem to endear himself to voters in that regard. And Baldwin was able to sort of make the race about him, about some of the controversial comments he said about people voting in nursing homes, about obese people paying more for health care, about single moms and different things. But now Hovde's ads are more focused on Baldwin, more focused on policy issues. They're not this direct-to-camera appeal, and that does seem to be coming across, even Democrats I talked to. So I do think it's a combination of both. It's the increased spending. I think it's more targeted advertising. But just in the fact that, you know, Democrats admit, you know, they never believed this was going to be a 7-point race, that there was always sort of going to be this natural tightening, just because that's the way races in Wisconsin are.
Interesting that as we consider the money in this race, Hovde is actually attacking Tammy Baldwin for insider trading, essentially accusing her of insider dealings on Wall Street, even attacking her partner, Maria Brisbane, who, as you point out, is a private wealth manager in New York. How much of that has to do with insider trading or reminding people that Tammy Baldwin is openly gay?
I mean, Republicans deny that that's something, but, you know, Democrats are certainly saying this is reminding her of her sexuality. She was the first lesbian elected to Congress, to the Senate, rather. And, you know, one of the taglines actually says she's in bed with Wall Street. So, I mean, it certainly does. It could have a subtle message there, but, you know, Republicans in these ads, they say it's just targeted to say, you know, she's profiting, or her partner potentially is profiting because they are not married. She does not have to disclose as much as if they were legally married in that regard. So I think it's, you know, but Republicans believe they found a salient line of attack, but Democrats say, you know, again, this could backfire if they're trying to hint at her sexuality.
Yeah. Spending time with Jessica Taylor from the Cook Political Report and their new ratings here on the Wisconsin Senate race. If we can just pull out the lens here a little bit here, zoom out, Jessica, to some of the other battlegrounds. We can even stay in the blue wall, Pennsylvania, Michigan. Are we seeing them all tighten in the same way Wisconsin is?
We are seeing more of a tightening. Now, Wisconsin was the closest race that we had. At the presidential level, they're all within the margin of error where our polling found, and that's very consistent. The Michigan race was a 4-point edge with the Democratic. Now, this is an open seat, so it's we're seeing, you know, a little bit more competitive there. That Alyssa Slotkin, her first time running statewide, she has far more money than her Republican opponent, former Congressman Mike Rogers, there. But in both Wisconsin and in Michigan, we're seeing the Senate Leadership Fund, the main super PAC, backed by Senate Leader Mitch McConnell, pour millions of dollars into there. They've also upped their buy there in Pennsylvania. And this is a state, you know, we rate Michigan still as a toss-up, but Pennsylvania is still in lean Democrat. But that one was a 7-point race in our poll. We have seen some internal GOP numbers that have that closer. Both sides believe this certainly could tighten. But right now, Bob Casey, who's, you know, longtime senator there, father was governor, he is running slightly ahead of where Harris is, and Dave McCormick still running slightly behind where Trump is. But would I be shocked to see this one become closer? I wouldn't.
And that's something. You know, it's not lost on us that Joe Biden was in Montgomery County stumping for Bob Casey earlier this week. Do you believe in reverse coattails? We only have a minute left here, Jessica, but could Bob Casey actually help Kamala Harris, or is it the other way around?
I think it might. I'm not. I think these presidential results are just tied, and if members can convince them to sort of see these as two distinct races. But again, we see these so closely tied. I'm a little skeptical of this reverse coattails. You know, there's been it brought up in North Carolina with what's gone on with the governor's race. We aren't seeing any evidence of that in our polling yet.
Really glad to get you back, Jessica Taylor. This is the busy time, 4 weeks to go here, and we're always looking at the Cook Political Report. Today it's Wisconsin, and we'll be making our way through all the swing states between now, of course, November 5th. Jessica Taylor, thank you so much. As we carry on live from Washington, I'm Joe Matthew. We'll bring Wendy Benjaminson into the conversation coming up with the politics of a natural disaster taking over the coverage here of Helene and now Milton. A lot more ahead on the fastest show in politics. Stay with us only on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. 1 hour, 39 minutes to go until the latest FOMC minutes. Stocks ripping higher. We're looking at records right to the numbers with the Dow up 367 points now, up by about 0.9%. S&P also at a record, up 32 now at 57.83, up by 0.6%. The old closing high, 57.62. Nasdaq up 0.4%, higher now by 73 points. Nasdaq NASDAQ is advancing, up 0.4 as we mentioned. The NASDAQ 100 index doing a little bit better, up now by 0.5%. 10-year 4.05%. The 2-year yield 4.00%. Gold down $4 the ounce, 26.12, and West Texas Intermediate crude down 0.5%, 73.22 for a barrel of WTI. Traders gearing up for key inflation data sent stocks within striking distance of records. Depends on where we close today. Big tech once again leading the charge. WW International shares surging after the diet company says it will begin offering a copycat version of weight loss drugs that cost far less than Novo Nordisk's Ozempic and Wegovy. The move comes just a week after WW, also known as Weight Watchers, announced the departure of its CEO. Weight Watchers, WW, up now by 42%. And Disney is increasing ticket prices for its 2 Southern California theme parks by about 6% on most days. Walt Disney shares, they're up 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie, thank you so much. Watching Wall Street for us here on Balance of Power every day on Bloomberg Radio, on the satellite, and on YouTube, where you can find us right now. Search Bloomberg Business News Live, and you'll find our live stream there. It goes all day from New York to Washington. Our political coverage now in place on this program, the fastest show in politics, and it's the Wednesday edition. Kamala Harris, as I mentioned, coming back to the nation's capital, in fact, getting a briefing a little while ago on Hurricane Milton, expected to make landfall around midnight or a little after midnight along the Gulf Coast of Florida, something that we're talking about all day here with many political implications, some of them unfortunate. But, of course, she's coming off the big media blitz. Did you see her somewhere yesterday? The View, Howard Stern Show, Stephen Colbert, did the whole round. Is there a name for that? Is that like the new full Ginsburg when you go to New York and do the... Talked about a lot of stuff. It wasn't a big policy day. Nobody expected that. And some relatively friendly interviewers talking to her. I mean, obviously, Kamala Harris being supported by Colbert and Stern. And she's doing these interviews on the day that we got the excerpts from this new Bob Woodward book, talking about a moment in American history in which most Americans could not get their hands on COVID tests in the throes of a pandemic. Remember the fear that people had at the time to learn that Donald Trump was giving COVID tests to Vladimir Putin for his personal use. Quite remarkable. And you better believe the vice president talked about that in one of these interviews, if not all of them. Here she is with Howard Stern.
As reported by Bob Woodward, in the height of the pandemic, and remember, and your listeners will remember, people were dying by the hundreds.
Yeah.
Everybody was scrambling to get these kits, the tests, the COVID test kits.
You couldn't get them.
Couldn't get them.
Right.
Couldn't get them anywhere.
Right.
And this guy who is president of the United States is sending them to Russia, to a murderous dictator for his personal use?
Well, Donald Trump says it never happened. Interesting, we did hear from the campaign last evening suggesting that this was not true, but the Kremlin confirmed it earlier today. Wendy Benjaminson has been watching all of this unfold from her perch in the newsroom here at Bloomberg in Washington, where she is senior editor. Great to see you, Wendy.
Thanks for having me.
What do you make of this most recent turn here? Woodward's been sitting on this for a while.
I guess he has, but this is just one of those crazy revelations we get, and it was just a sort of a gift to Harris that it broke right in the middle of this media blitz where she could have it all. But what a weird moment for Donald Trump. He says none of it is true. Yeah. His spokesman says it should be in the fiction like reject bin, or even worse, used as toilet paper. And then the Kremlin comes out and goes, yeah, he sent me some tests. Okay. Which is just sort of odd. They do deny, the Kremlin does deny the many post-presidential phone calls that Woodward reported. But,
like he's laughing it up with Vladimir Putin on the phone from Mar-a-Lago.
Right.
In this case,
he's doing it while, apparently he was doing it while Republicans were inching away from Ukraine.
What a thought.
So, that makes it sort of questionable.
Yeah, this is pretty amazing. The Trump campaign issued a statement saying, quote, none of these made-up stories by Bob Woodward are true. They accused him of bias. Kremlin spokesman Dmitry Peskov says the tests were sent. Quote, we also sent equipment at the beginning of the pandemic, but about the phone calls, that's not true. So interesting here, as Donald Trump, I'm assuming this doesn't change anyone's mind on the election. Did anything that happened yesterday with Kamala Harris?
Will that change anyone's mind?
Yeah.
It's hard to tell.
She put a lot of time into this media thing.
She really did. She is fighting the accusation from the Trump campaign that she isn't doing enough interviews. She's also fighting from some frustration from journalists that she wasn't doing enough interviews. These are certainly in, you know, as you said, friendly interviews. However, she did do 60 Minutes. So, you know, she's starting to get out there more in these unscripted moments, which people want to see. You know, she introduced one policy thing, Medicare,
for home health aids,
enhancements for home health aid. So those are good, but mostly it was like the get to know you moment. So now we know there will be no golfing at the White House in a Harris administration, and yes to Miller High Life beer, which she called the champagne of beers. You know, it's brewed in Wisconsin. She needs, it's one of those, let's have a beer with Kamala Harris moments, you know?
Let's have a beer summit.
She took one sip. I don't know how much Miller High Life is actually up there at the Naval Observatory, the vice presidential residence. Yeah, I'd like to go in the beer fridge and find out.
How domestic. Made in the USA. But, you know, look, some people think that's a lot more important than policy at this point when you're running against Donald Trump in a cult of personality.
Absolutely. I mean, it's a squeaker of a race, as we've talked about here many times. It is well within most polls' margin of error who's going to win. And it can hinge on anything. It can hinge on fans of Miller High Life. It can, you know, hinge on something Donald Trump says that people really, you know, are touched by. So at this point, she's right to do this. Humanize herself, go out there and show that she can, you know, say all the right things and be a normal person and be well liked.
This beer thing is going to confuse a lot of people, right? Republicans were already boycotting Bud Light because of the trans thing. Now I can't be caught with a Miller High. This is too complicated.
Well, this is also part of her attempt to court rural voters. She is not committing the same mistake that Hillary Clinton made in 2016, which is to ignore the rural vote, just write them off as Trump country. I think Hillary Clinton called them a basket of deplorables. But Walz is from Nebraska and Minnesota. You know, she's from San Francisco, so she's got a little work to do with rural communities, but they're getting out there. And, you know, popping a Miller High Life is not a terrible way to do that.
Sounds kind of good right now.
It really does.
I guess it's too early for us, Wendy.
Well, it's afternoon.
The politics, that's true. It's 5 o'clock somewhere. The politics of the storm, a story we can't hide from. We're going to talk to Rick and Jeannie about this coming up. But we wake up to an op-ed today from J.D. Vance, who's kind of digging the hole a little bit deeper, accusing the administration of foot dragging, of doing a poor job. They say he did even worse than Barack Obama, which I didn't realize was a metric. You were on the air with us last evening on the late edition of Balance of Power, and you had a checklist that's been put out here debunking misinformation in North Carolina by the Congressman Chuck Edwards. It begins with the fact that nobody can control the weather, which Marjorie Taylor Greene started. Like, Democrats are actually using the weather to impact the outcome of the campaign. I don't know where the weather machine is, but we do have another one coming here, Wendy, and this is not getting any less complicated.
Right, and she may have meant Democrats, but remember, she also suggested last year, I think, that Jews can control
the
things.
Israeli space laser.
The Jewish space laser.
Okay.
She didn't even narrow it down to Israeli. And then she comes out and says, yes, they can control the weather. So I don't, you know, who knows with that one. But you're right. Chuck Edwards came out with a lengthy list. They are not trying to take over the town of, they being the federal government this time, not Jews, are not trying to take over the town of Chimney Rock. You will get FEMA aid. That $750 is the initial, go get yourself some water, go get, you know.
That's not for your house.
Right, that's not for your house. That comes much later after the storm. But despite what J.D. Vance said in that Wall Street Journal op-ed, there have been no credible reporting of massive screw-ups by FEMA in these storms. Whether Biden was, as he said, on Rehoboth Beach when it hit, fine. He has spoken to all of the governors. Kamala Harris has been trying to talk to the governors. I can kind of see DeSantis's point about why do I need a call from Kamala Harris right now? It's not typical for the vice president to be making those calls. So, you know, so there's a little politicizing going on both sides, except the scale. As I think you pointed out earlier, she tried to call Ron DeSantis, fine. But these long lists of just lies that are coming out there, started by Donald Trump, now aided by J.D. Vance, and then taken over by his supporters on the internet. It can actually hurt people to know that they give up on getting aid, they give up on on getting the things they need to recover from these deadly storms.
Chuck Edwards, in fact, was saying in an interview that some folks are blocking FEMA officials from getting into certain areas because they're afraid that they'll be confiscating their property or taking over the town, as you just mentioned. A lot of this, Wendy, is being reinforced by, if not introduced by, Elon Musk, who, of course, shared a stage with Donald Trump last weekend and is actively funding a big chunk of the campaign. He has helped to spread accusations that FEMA actively blocked donations to victims, that it is seizing goods, locking them away to state they are their own, that FEMA officials are doing things to hurt people rather than help them. The role that Elon Musk is playing in this campaign has become pronounced.
It extremely pronounced, and he does it from a seat of great power, not just because he's the richest man in the world, but because he owns X, the social media platform, and he is using his own platform to promote these lies. Now, whatever your politics are, the things he is saying are simply not true. And, for example, Trump took credit falsely for asking Musk to provide Starlink, his internet service, over North Carolina, when he has a contract with the U.S. federal government and it was already in place. So, he's not even correcting things like that. And he is amplifying these lies, being able to manipulate the social media platform to make sure people see them.
Is the whole crescendo here in our remaining moment when Donald Trump visits Aurora, Colorado on Friday?
Oh, now we're going to immigration. Yes.
Yeah.
I mean, I'm quite sure. I think we read that the officials in Aurora are like, really, don't come.
He does not come.
Yeah, just like
to
people in
expose
Springfield
Venezuelan gangs, he says, that are taking over the town.
Right. And in fact, there were Venezuelan gangs in one apartment complex. Local law enforcement is handling it. But Trump made this claim that it was taking over the entire town. And now he's going there, which can only help to foment possible violence against Venezuelan immigrants or other Latino immigrants, or just this sort of anger over all of this uncertainty.
These are wild times.
It's really wild times.
Normally, this would be an incredibly busy and stressful moment in a campaign. This is making things a lot more complicated, and that's why we have Bloomberg and the great work of Wendy Benjaminson, who actually edits the content that you read on the terminal and online and that we talk about here on the program. It's great to have you back, as always, Wendy. I'm Joe Matthew in Washington. We will assemble our panel next. Their take on the politics of the storm, the use of misinformation and disinformation, and how we recover from this. Rick Davis and Jeannie Shanzano next on Balance of Power. This is Bloomberg.
1240 on Wall Street. We do check markets all day long here at Bloomberg. We have got U.S. stocks trading at records. S&P up 31 now to 57.83. If we close there, that will be a new high, a record up 0.6%. The Dow up 339 now, up 0.8%. NASDAQ higher by 83, a gain of 0.5%. 10-year 4.05, the 2-year 4.00%. This ahead of Fed minutes coming up at 2 o'clock Wall Street time. Spot gold down $12 the ounce, 26.08, down 0.5%. While West Texas Intermediate crude is now down 1.2%, 72.67 a barrel on WTI. So the Dow, the S&P, NASDAQ all advancing on this Wednesday. Certainly a major issue hanging over Washington is the budget deficit. Esther George is the former president and CEO of the Federal Reserve Bank of Kansas City. She was interviewed this morning on Bloomberg Television's Open Interest program.
Depending on how elections go and how Congress and policymakers think about the U.S. fiscal position, it will have dramatic implications for the country. And so the sooner those are addressed, the more specifically they're addressed, the better it will be in terms of tackling what is an enormous problem.
Esther George, former president and CEO of the Federal Reserve Bank of Kansas City. Boeing has withdrawn its contract offer as union talks break down. Both the embattled company and the International Association of Machinists and Aerospace Workers blame each other for the impasse. Boeing shares today, they are slumping, down now by 2.4%. Recapping, U.S. stocks are at a record now with the S&P up 32, up by about 0.6%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcast. Balance of Power continues. Back we go to Washington. Once again, your host, there he is, Joe Matthew.
All right, Charlie Pellet, thank you so much. Watching Wall Street here on Balance of Power, every day live from New York. We're in Washington on the fastest show in politics as we count down to landfall tonight, the next storm, the second hurricane, major hurricane in just 13 days. Milton set to touch down, make landfall on the Gulf Coast of Florida just after midnight. This is going to be an overnight event with hundreds of thousands having already evacuated the area. There are great concerns here about what is going to happen. If you've been with us on Bloomberg, you know this already. Winds in excess of 150 miles an hour, a 15-foot storm surge expected in Tampa. Lives are on the line here. And there's a political debate that's taking place about the response to the last hurricane and the preparations for the next, with a good dose of misinformation and disinformation just to confuse everybody here. And look, this happens every time we get a major storm, right? There's an argument about the response. There are stories about gouging and scamming. This is different this time. Look no further than the pages of the Wall Street Journal, where Donald Trump's running mate, Senator J.D. Vance, writes an op-ed to slap down the administration for its work on Hurricane Helene on the same day that Milton's expected to land. The headline says it all. Biden-Harris mismanaged Hurricane Helene. He talks about Joe Biden being in Rehoboth Beach, Vice President Kamala Harris flying between ritzy California fundraisers, hobnobbing with celebrities, Secretary Alejandro Mayorkas in L.A. presiding over an awards ceremony. He says the vice president had blown off her disaster response briefings, a staple of the Trump administration's disaster response planning. Says troops that had been called up did not arrive on time, nor did the resources that so many people needed. Writing, quote, even the Obama administration was better at deploying assets in disaster zones. Now, all this is happening, of course, against the backdrop of misinformation in North Carolina, where we're hearing stories about FEMA crews being blocked because people are told they're there to confiscate their property. Let's assemble our political panel for more on the politics of a natural disaster. Rick Davis is with us, partner at Stone Court Capital, of course, Bloomberg Politics contributor and Republican strategist, joined today by Laura Fink of Rebel Communications, founder and CEO, also Democratic strategist. Laura, welcome back to the program. It's great to see you here with Rick, and I'll have you respond first to what we're hearing from J.D. Vance. With so much misinformation out there surrounding this first storm, what are voters supposed to believe?
Well, Joe, I appreciate you talking about the misinformation, but what was neglected to be mentioned in the reporting is that a lot of it is coming from Donald Trump. And J.D. Vance is no exception. Now, I don't know where the Wall Street Journal's fact-checking page went, but there was a lot of misdirection and a lot of out-and-out lying in that op-ed. And that's kind of a first. You know, we all trust the Wall Street Journal and their editors, but it seems like they took a day off. So I think the challenge is that this prevents aid from getting to people when you tell them that there's only $750 and no more aid will be available to them. When you have Republican governors that are all saying, hey, we're getting what we need from the president and the vice president, and then you've got people playing politics with aid. I think the problem is there are real victims here, and they're the victims of the storm. So this is a little bit of a disappointing week, even in, you know, the rough slings and arrows of politics. This really seems like something that should be bipartisan and off limits.
Well, I get you here. As we said, lives are on the line, and you're right. A lot of it is coming from Donald Trump himself. A lot of it is reinforced by, amplified by Elon Musk. Congressman Chuck Edwards of North Carolina out with a list of debunking some of these things, including our ability to, quote unquote, control the weather. He says we have seen, quote, an uptick in untrustworthy sources trying to spark chaos by sharing hoaxes, conspiracy theories, and hearsay about hurricane response efforts across our mountains. Elon Musk, of course, Rick Davis, has helped to spread a lot of this stuff, accusations that FEMA is actively blocking donations to victims of Helene, seizing goods along the way. The impact on the outcome of this election might take some time to gauge here. What is this doing to the voter making up their minds right now?
Well, I mean, the voters are very vulnerable, especially in places like Western North Carolina, where they are distracted by their own personal situations and well done that they are. But it does allow more disinformation to spread quickly because of this kind of chaotic situation. And I think that ultimately there's going to be a comeuppance. This is an area that has always been sacrosanct in the government. We come together to help people in crisis. But to be honest, I think that Laura's right. This is really at the hands of one individual, Donald Trump, who has used in his presidency disasters to target communities, politically. And so I think when we start looking at how to regulate the social media industry, it's been a hot topic in Washington for a long time, well overdue. You're going to start seeing people look at X and say, these are the folks who are spreading a lot of false and misinformation about the elections and about people's conditions. Maybe they ought to have some of their editorial protections taken away from them. And I can't imagine a debate in Congress without that being a major topic at this stage.
Joe Biden is going to be speaking a little bit later on from the White House. Laura is actually talking right now, having been briefed on the storm response from Helene and preparations for Milton. He says, quote, there's been a reckless, irresponsible, and relentless promotion of disinformation and outright lies that are disturbing people, undermining confidence in the incredible rescue recovery work that has already been taken, will continue to be taken. Does he need to talk about this when he addresses the American people at 5:30? Who's going to be the arbiter of truth at this moment, Laura?
Well, I hope it's the most recent voice, and I hope that voice is President Biden's, because he has the information at hand. And, we can play politics with who, what, when, where, why after people get the aid that they need. And you see, like, rank and file Republican senators, state senators from the state of North Carolina saying, hey, my phone is ringing off the hook here, and because people are confused. And so the government, from the FEMA information page on down, has really been working hard to hit the airwaves to tell the truth about the availability of aid, and and also the updates on to leave your home out of Florida right now with Milton bearing down. So all of this, the trust in government around natural disasters needs to remain in place to save lives. And so I think President Biden has always been a bulwark, and that has been part of his priority and brand, and we'll see that continue today, I imagine.
Rick, does the Biden administration have the credibility to set the record straight here with the American people, or do we have half the country believing one thing and half the country believing something else no matter what?
I think that the divisions that exist across the country and across parties are pretty deep and very difficult for institutions to penetrate them at this stage. Certainly not the White House. They're well defined. Democrats listen to Biden and Republicans don't, and vice versa. So I think that this is going to have to be an issue that people start to think about. How do we reinforce our institutions? How do we put more credibility into our courts and into places like FEMA? Used to be FEMA was revered as an organization that was totally committed to helping people, and we've now totally undermined that. But I would say, some of the criticism is not all fake. It took 6 days to get those troops on the ground in North Carolina. It didn't need to take that long. In the past, it's taken half that time. So there are competency issues with the Biden administration. Those are fair game. What's not fair game is making up stories about the plight of people on the ground to take political advantage.
And scaring people. Rick, you've run presidential campaigns. Would you have, with that said, dispatched your vice presidential nominee to put an op-ed out there like that the day the next storm is landing?
Well, I certainly would have gotten ahead of it. It's not like we don't sit here today and know exactly what's going to happen in the state of Florida, by tonight and tomorrow morning. And so if we know we're going to wake up with a disaster of epic proportions on, our citizens, we should have a campaign set up within the campaign to make sure that we are, doing everything we can to support government resources going in to help these people. And the idea that, calls weren't being made or, people were on airplanes and, it took, 3 days, 4 days for the vice president to go down and see the people who were mostly affected. I mean, I look back at this stuff and I'm like, this really isn't learning the lessons of Katrina. And we had experience with this in the McCain campaign in 2008. And we made it the top priority of the campaign because we knew if the American public had any sense that we were putting our self-interest ahead of the public's interest, they would punish us, and they should.
Well, we consider the liabilities, potential liabilities of incumbency in this particular case. Laura Fink, I'm drawn back to the latest New York Times Siena College poll that found Kamala Harris beating Donald Trump when it came to being perceived as an agent of change. And I wonder what you make of that in this particular case. She's part of this administration right now. She's also running against someone who likes to call himself president still, as do his supporters. How does that shake out for you, and does it mean an advantage for Kamala Harris in a complicated time responding to a storm like this?
Well, I want to first say that's a complicated question, but I'll get to that. But I just first wanted to respond to Rick. And frankly, disaster zones are precarious and they're fragile, and having elected officials with all of their security come in needs to be a very well-timed issue. And so we saw Donald Trump building a faux wall and holding a press conference in Georgia. And I think that the vice president was much more sensitive with her travel and much more surgical in terms of working with Republican governors to say, hey, when is this going to be the least interruptive? Because you want to show care, but you also want to respect the work of the emergency workers without making yourself the story. So that's always a balance for elected officials of either party. But to get to your question about change, I think what Kamala Harris has successfully done, and this is really hard to do given that she's part of the current administration, is she's made this election about the future. And the way that she's branded herself as the change candidate is to be able to articulate what she would do and gain voters' trust in terms of who you would trust personally to handle and to help you with your economic situation, who you would trust personally to help you with the slings and arrows of what's coming in terms of the future. And Donald Trump is really focused on things like who won the 2020 election. And I think his continual look backward really serves as making him the functional incumbent in this race. And now there was always a debate about who would, grab the title of the change candidate. And I think Kamala, we see the numbers moving in her direction.
That's fascinating. Rick, we're down to our final moment here. Who's the incumbent in this race?
Well, I do think Harris has done an amazing job of slipping the noose of incumbency. And I think Donald Trump may be perceived as an incumbent. But the thing that should be worrisome to the Harris campaign is that Donald Trump's presidency is seen as much more positive than theirs. So being an incumbent in this case may actually be to the benefit of Donald Trump. So don't always, you don't always get what you're asking for when you try and set up the predicate for change.
Fascinating. Slipping the noose of incumbency with Rick Davis. That's a great conversation. We have a great panel today. They'll be back in our second hour. Rick Davis, of course, Bloomberg Politics contributor, Stone Court Capital, alongside today Laura Fink from Rebel Communications. We'll have a lot more with them in hour number 2. Kaylee Lyons will join the conversation, and we'll welcome our global television audience to the fastest show in politics. We're keeping tabs on Milton. We'll get an update for you straight ahead and a report from the White House coming up here on Balance of Power. This is Bloomberg.
politics to the world of business. This is Balance of Power. Live from Washington, D.C.
Hurricane Milton makes its final approach to the Gulf Coast. Welcome to the fastest show in politics as hundreds of thousands evacuate ahead of the Category 4 storm making landfall overnight in Florida. I'm Joe Matthew alongside Kaylee Lyons in Washington. Welcome to the Wednesday edition of Balance of Power here on Bloomberg TV and radio. Kaylee, lives are in danger here as we continue to see an argument over the response to the last hurricane, the preparations from this one with an added layer of misinformation.
Well, that's absolutely right. A lot of that being propagated by Donald Trump in particular when it comes to accusations he has made about the way in which FEMA resources are being deployed. Many of them are indeed false. And his running mate, J.D. Vance, today penning an op-ed in the Wall Street Journal about what he is describing as the mismanagement of Hurricane Helene, the hurricane that hit less than 2 weeks ago and devastated many communities in the Southeast on the part of the Biden-Harris administration. What we do know is that while there were some delays in response in the aftermath of Helene, there are already hundreds of personnel on the ground in Florida ready to go to respond and recover when this thing hits.
He's accusing FEMA of picking winners and losers in that op-ed in the Wall Street Journal. Pretty tough stuff, as we are now only hours away from Hurricane Milton making landfall in Florida. Kaylee, that's supposed to happen overnight. We're going to talk coming up with Bob Henson with the Yale Climate Connection, author of The Thinking Person's Guide to Climate Change, about the way we should be looking at this and what we might find by tomorrow morning.
Yeah, and we'll get the latest from the White House as well, as President Biden and Vice President Kamala Harris just delivered a briefing. But before we do so, let's get a check on the markets. Charlie Pellet has a look from New York.
Thank you very much, Kaylee. Line's going to be a very busy 24-hour period. We have got the Dow, the S&P, NASDAQ all right, moving higher. We are trading at records right to the numbers, with the S&P up 26 now, up by about 0.5%. The S&P at 57.77, taking out the old high of 57.62. Big question, will we close above or below the old record today? Got to keep it locked into Bloomberg television and radio for the latest. The Dow now higher by 341, up by about 0.8%. NASDAQ up 0.3%. 10-year, 4.05%. The 2-year, 4.00%. 59 minutes away from the latest FOMC minutes. And we have got spot gold trading lower by 0.5%, 26.08 the ounce, while West Texas Intermediate crude down 0.8%, 72.97 for a barrel of WTI. Briefly, the Justice Department is considering asking a federal judge to force Google to sell off parts of its business in what would be a historic breakup of one of the world's biggest tech companies. Alphabet shares, parent of Google, down now by roughly 2%. And Boeing has withdrawn its contract offer as union talks break down. Boeing shares today, they are lower by 2.35%. So again, recapping, big story, record for the U.S. stock market. As of now, up 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcast. Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. From here in Washington, we are casting our eyes on Florida, which is bracing for what is being described as a once-in-a-century storm as Hurricane Milton prepares to make landfall, or everybody prepares for its landfall that could come late this evening. We know 11 counties have been evacuated, millions of people, because lives are going to be in danger. As we have heard very directly from the mayor of Tampa herself, she says if you do not evacuate and you're in one of those zones, you will die. And that is the serious nature of this potential disaster that we're discussing here. Joe, not just the wind, as this has now been downgraded again to a Category 4, still incredibly strong winds, not necessarily Category 5 level, but it's the water and the storm surge that could result from this.
That's what we're hearing, and why many are hoping that this storm takes a path that goes south of Tampa Bay. Either way, it's going to be very difficult here, with hundreds of thousands of people already evacuated. Governor Ron DeSantis activating thousands of National Guard troops. And following our conversation with Craig Fugate last evening, the former FEMA administrator, if there's any silver lining here, having two back-to-back storms, it's the fact that there are thousands of FEMA workers already in Florida, and all of the equipment that they brought with them. They'll be hunkering down along with everyone else there, Kaylee. We're looking at landfall just after midnight is the current track. Yeah. Cat 4, according to the National Hurricane Center, and Bob Henson, meteorologist and journalist with Yale Climate Connections, joins us now with his eyes on the storm as well. Bob, thanks for being with us here. When we talk about Category 4 versus Category 5, is there any difference in your mind when it comes to storm surge?
In this case, not really. You know, the storm surge is the cumulative surge produced over the time that the hurricane is approaching the coast. And so we've had a powerful hurricane in the Gulf of Mexico for more than 2 days now. Cat 5 2 times, which is extremely unusual. revived last night to Cat 5 strength. So that water is baked in, it's pushing toward the coast, and the winds may decrease to Cat 3 level by the time it gets to the coast, but the wind field is also expanding. So you've got a larger area of winds that are going to be more than strong enough to bring down trees and power lines. So there's just going to be all kinds of, unfortunately, destruction over a large area, and the storm surge is pretty much baked in at this point.
Well, and that's why in so many of these areas, people have been told to evacuate or risk their lives if they stay. Bob, can we talk about the speed of this storm as well? Because we've seen in hurricane seasons past that often it is if a storm sits over one area too long and is raining for longer, producing more water, that can cause a lot of the catastrophic damage as well. Is this going to hit hard and fast, or is this going to be sitting over the western coast for some time before it moves across the rest of the state?
Well, the good news is it's a fast-moving storm. It's right now between 15 and 20 miles an hour. It will be reaching the coast sometime between 6 p.m. and midnight tonight, maybe around 9 or 10. Moving across the state by tomorrow morning, it will already be off the coast, probably somewhere between Melbourne and Daytona Beach, and out the Atlantic. So it will be traversing the state pretty quickly. However, there's going to be a lot of problems regardless of that in terms of water, because not only do we have what will probably be a record storm surge along the coast, roughly between Tampa, Sarasota, and down the coast from there, almost toward Cape Coral. We're also going to have extremely heavy rains. We're talking 10 to 15 inches of rain, which may include the Tampa Bay area. Now, if it's toward the high end of that, that will be the heaviest two-day rain they've ever had in the history of Tampa. So given the expanse of that metro area, there could be tremendous flooding. The big question is, will the storm surge be as bad as feared in Tampa itself? Right now, it looks like they're going to be right on the edge. It could be there. They may end up on the north side of the center. We're just going to have to see. That cannot be predicted, because it comes down to a wobble of the storm. 10 or 20 miles will make all the difference.
Well, you're pointing us to what really counts here, Bob, as we follow the track of the storm tonight and its landing likely early tomorrow morning. What is the differing result between landfall just north of Tampa versus south?
Well, if you say that the center came in just a little north of Tampa, and that looks very unlikely, you would have west winds pushing right into the bay as the hurricane came on shore, pushing the surge into the bay. That's pretty much the worst case scenario that has been contemplated for a century for Tampa. If the eye comes in, say, 20 miles south of Tampa, then you're going to actually have water exiting the bay or trying to exit the bay, and you simply won't have the same surge disaster in Tampa. Now, this is simply pushing the disaster down the coast, of course, and it's important to keep in mind that Manatee County, Sarasota County, which are south of Tampa, St. Petersburg, they have close to 1 million people, almost half as much as Pinellas and Hillsborough counties, which are Tampa and St. Petersburg. So it's not negligible if those areas get hit by the worst of the surge. And again, this will be record surge. People living now have not seen the kind of surge that they will be getting just south of the center.
Well, and as we consider that no living person will have experienced this, that we are describing this as a once-in-a-century storm, it is worth pointing out what has changed in terms of the climate over the last century. We're talking about warmer waters in the Gulf, for example, that have allowed this storm to become what it is. How should we be considering the climate aspect of this, Bob, and how this potentially will inform what the storms of the future could look like?
Well, here's one anecdote to consider. There have only been 3 hurricanes that have hit Cat 5, then weakened, then hit Cat 5 again in the Gulf of Mexico. The other 2 were Camille in 1969 and Allen in 1980. Now, both those occurred in August, right? Well, here we are almost to the middle of October, and we're getting this event happening again. So that tells you something about the waters being warm enough in October to sustain an event that previously had only occurred in August, right? The waters simply are warmer. This is about as straightforward as it gets. We are warming the oceans around the world, and that means you're going to have periods when you have record warm water for a given time of year, and that's exactly what we have right now in the Gulf. So that's not a complicated, concept. It's a basic heat engine. You warm up the oceans, and that provides fuel for hurricanes. So we can expect not every year we'll have a lot of hurricanes. The number of hurricanes may not actually increase. what we've been seeing so far is that the proportion of hurricanes that get to really intense strengths has been going up, and also the rapidity with which they strengthen. And we saw that manifested with Milton on Monday, where it cranked from a tropical storm to Category 5 in about 25 hours.
Wow. National Hurricane Center, Bob, says Milton could also spawn tornadoes in the area. How likely is that? How much more damage would that cause?
Well, it's already happening. We've had tornadoes near Fort Lauderdale just in the last several hours. So we're going to have a cluster of what are called supercell thunderstorms. So these are the ones that can produce the bona fide substantial tornadoes, like EF2 or stronger. So we're not talking about water spouts that may move just on shore. These are, the real thing. And there could be dozens of them. Some hurricanes have spawned up more than 100 tornadoes. Now, we're not expecting that, but there could be quite a few. And this will mainly affect areas roughly in the vicinity of Lake Okeechobee, maybe down towards South Florida, basically south of the track of Milton. So what we're looking at is a corridor of extremely heavy rains north of the track of Milton, and then a corridor of very strong winds near and just south of the center and the storm surge, obviously. The wind corridor could go all the way across the state at a hurricane force. And south of that, the supercell thunderstorms and tornadoes, especially this afternoon and into tonight.
It's just frightening to consider what Florida, the entire state, could experience over the next 24 to 48 hours, Bob. And as we consider what emergency personnel are going to have to respond to, including FEMA, and the resources that will be required, obviously we're talking tens of billions of dollars, if not hundreds of billions of dollars of damages over the course of these two storms we've seen in the last 2 weeks. We heard from the Homeland Security Secretary, Alejandro Mayorkas, last week, who said, well, FEMA does have the means to immediately respond to these storms. They may not be able to make it all the way through hurricane season. And given what you just told us a moment ago, this notion that we're seeing storms this powerful in October when we used to see them historically more so in August, say, are we going to look at an extended hurricane season in the future? Because that has implications for the allotment of resources to potential emergency responses that could need to happen over a prolonged period of time.
Yeah, this is very similar to what's been happening with wildfires. I live in Boulder, Colorado. We had a catastrophic wildfire here 3 years ago on December 30th. Nobody had seen anything, close to something that bad that late in the year. Destroyed 1,000 homes just a few miles from me, right? And this is Colorado, where we normally have at least a little snow on the ground at the end of December. So wildfire season has expanded. Hurricane season seems to be expanding a little bit. And in particular, there are years like this year where we are going into La Nina, which is a natural process. But when you combine that with record warm oceans, La Ninas allow the hurricane season to extend further into the fall and late fall. And I'm afraid this year that's exactly what we're seeing. There are already hints that we may have yet another system developing in the Western Caribbean about a week from now. So there's no sign that this really heavy backloaded season, as we call it, is going to be winding down in the immediate future. And we certainly have to be prepared from an emergency response standpoint for just protracted periods and multiple hits in short order, as we're seeing right now in Florida and across the Southeast.
Also, considering the strength of this storm, the impact of warming waters, what does it mean once the storm goes inland in this case, Bob? What happens to Orlando? Can the storm continue at hurricane strength until it reaches the East Coast?
It's actually precisely predicted to do just that. It is expected to come offshore tomorrow morning still as a hurricane. Now, the strongest winds will be just south of the center. There may be a corridor, maybe 10, 15, 20 miles across with, winds of, 50, 60, 70 miles an hour and gusts even a little above that. That corridor will probably be just south of Orlando, the way it's looking now, roughly from just south of landfall location between Tampa and Fort Myers up toward perhaps reaching Melbourne to Daytona Beach and crossing the state a little bit south of Orlando. But Orlando is squarely in the crosshairs for extremely heavy rain. They could also see 10 inches or more of rain, and those rains will have embedded downburst winds. So you're going to have the problem of trees and power lines going down, and very heavy rains with severe inland flooding, and potentially catastrophic, life-threatening flash floods well inland from the hurricane. So Orlando could see a very, very rough night. As far as pure winds, the worst of the hurricane-style winds may be just south of them.
All right, Bob, thank you so much for being with us. That's Bob Henson, meteorologist and journalist with Yale Climate Connections, also author of The Thinking Person's Guide to Climate Change. We appreciate your insights as we track this very powerful storm. And we also want to track the response from the White House to this storm, as we just heard from President Biden and Vice President Harris within the last hour. So let's go now to the White House North Lawn, where we find Bloomberg's Tyler Kendall. Tyler, what did we learn from the briefing?
Yeah, hey, Kelly. So we know that President Biden is still at that briefing in the White House on his administration's response to Hurricane Milton. At the top, he gave those remarks saying that this is, quote, literally a matter of life and death when it comes to heeding the administration's safety guidance. We are expecting President Biden to deliver remarks to the nation later tonight at 5:30 p.m. Eastern. The White House also went ahead and canceled some of President Biden's scheduled international travel, with stops to Germany and Angola slated for later this week. Instead, he will now remain in Washington to monitor the federal response to the storm. Now, President Biden also said that he has been in touch with all the governors in the expected impacted states. That includes Florida Governor Ron DeSantis. Of course, Florida is a big focus of this White House briefing today. And actually, Governor DeSantis held a briefing this morning where he went ahead and he thanked the personnel that are already on the ground when it comes to first responders, but also the federal personnel that are already deploying to the state.
There was so much that was done in the immediate aftermath and is still being done in that. Then you have another storm that developed, and immediately you're back on that posture, round the clock, no time to rest, no time to sleep for a lot of these folks, and it's not easy. And so I just want to say, on behalf of the state of Florida, thank you for discharging your duties. Thank you for accepting this mission. It's not going to be easy.
Now, as you both have been covering, there's been this emerging intersection between Hurricanes Helene and Milton, which you heard the governor allude to there, but also the race for the White House. Just this morning, vice presidential candidate J.D. Vance penned an op-ed in the Wall Street Journal alleging a slow response from the White House. This comes on the heels of North Carolina Senator Ted Budd calling attention to a delay in 1,000 authorized troops getting to his state after the Pentagon had said that they would be deployed within 24 hours. But for their part, the White House has been defending its federal response. You heard President Biden earlier here calling misinformation incredibly dangerous. FEMA put out some new figures this morning on their response. They're saying that now federal assistance for survivors of Helene surpasses $286 million. There's also currently 7,000 federal personnel deployed across the country when it comes to these disaster zones.
Bringing us the facts from the North Lawn of the White House, Tyler Kendall reporting for Bloomberg. Tyler, thank you so much. As we mentioned, Joe Biden will be speaking from the White House around 5:30 p.m. Eastern Time, and we'll bring you his remarks as we get a bit closer. We'll assemble our panel coming up next with Kaylee Lyons. I'm Joe Matthew on the fastest show in politics. This is Bloomberg.
1:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks holding close to session highs. In fact, a record right now on the S&P at 5784, up 32 points, up by about 0.6%. 39 minutes away from the latest Fed minutes. We've got the Dow up almost 400 points, up 395, up 0.9%. The Nasdaq Composite Index is advancing 73 points, up 0.4%. 10-year 4.06%. The 2-year 4.00%. Spot gold down $13 the ounce, 26.08, a drop right now of 0.5%. And West Texas Intermediate crude down almost 1%, 72.94 a barrel. WW International shares are surging 48%. The stock is jumping after the diet company said it will begin offering a copycat version of weight loss drugs that cost far less than Novo Nordisk's Ozempic and Wegovy. WW, of course, used to be known as Weight Watchers. That stock, one more time, up now by 50%. Recapping, stocks are pushing higher. S&P up 32, up by about 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Balance of Power continues. And once again, your hosts. Here they are with the Wednesday edition, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. I'm Kaylee Lyons alongside Joe Matthew here in Washington. Welcome back to Balance of Power on Bloomberg TV and radio, where we are continuing to keep track of this election as it grows closer and closer, now less than 4 weeks away. And with such a short time to go, another natural disaster potentially throwing a wrench, not just in people's lives who are affected, but in this campaign as well, as we have seen some politicization of the approaching Hurricane Milton, which is getting ready to slam into Florida's west coast. There's a lot of misinformation specifically circulating about these storms and the way in which the government is responding to them. This is something that was addressed by President Biden at the White House earlier today.
There's been a reckless, irresponsible, and relentless promotion of disinformation and outright lies that are disturbing people. It's undermining confidence in the incredible rescue and recovery work that has already been taken and will continue to be taken. And it's harmful to those who need help the most. There's simply no place for this to happen.
So we start with our political panel. With us today, Rick Davis, partner at Stone Court Capital, Republican strategist, and of course, Bloomberg Politics contributor, alongside Laura Fink of Rebel Communications. She's founder and CEO of the firm Democratic Strategist. With the pretty difficult conversation that we're having here in Washington, Rick Davis, how is the White House doing in setting the record straight on this? Joe Biden and Kamala Harris were briefed earlier. The president will be addressing the American people later today from the Roosevelt Room. Is he the voice of credibility on this misinformation?
Yeah, I think the fact that he's addressing it raises the level of importance to it significantly. I saw Secretary Mayorkas on morning shows today, echoing his statements, trying to tamp down these kinds of misinformations. But I think it needs to be comprehensive all through the government, which I think they're in the process of doing. But also, I think they should sit down with as many members of Congress as they can. Those senators affected in the zones that are being disrupted by these weather occurrences. And ask them to do the same thing. We've seen many Republican mayors in North Carolina try to tamp down the rumors on their own. Maybe a concerted effort to put everybody together and uniformly dispel these things, because we're up against, we're not up against, they are up against people with a bigger megaphone, a presidential campaign of Donald Trump's, and a massive social media company like Elon Musk are the ones who are putting fuel to the fire of these rumors and falsehoods.
Well, and of course, affecting potentially real lives in the process if people don't understand what resources are available to them, what the correct information is, which is why this effort may be so critical. It does raise the question, though, as to, other than the detrimental effect it could have, what positive effect it could have, or why this information is being circulated in the first place, these suggestions being made, including, frankly, though it is not false in all of its allegations. The op-ed from J.D. Vance about the delayed response we did see in terms of troops going into North Carolina after Hurricane Helene. Laura, when we consider what this does and the people who may be most open to receiving this misinformation and trusting what they hear from these sources, are these people who are already going to be supportive of Donald Trump already, or are these people who could actually change their minds about an incumbent in Kamala Harris, given the federal government response to this that they believe is happening?
Well, no one is going to find the silver bullet on the issue that will impact the swing voters that seem to be so elusive in this election. But I will say this: they are changing the conversation. They understand Donald Trump has an all-based strategy, and so he is tying this to immigration. All of the false claims are about funding that has nothing to do with the emergency aid that FEMA uses. But by saying immigrants are stealing your funding, he's able to bring that strength of an issue back to the conversation and lying to do it. But I think that this changes the subject for him. And he really has shown, and J.D. Vance has really not shown any willingness to stick to the facts. And, I agree with Rick, who said earlier in the hour that, criticism is fair game with respect to response times, et cetera. But I think we also have to focus on when leadership is in the midst of a natural disaster, it's absolutely critical that we're all speaking from the same playbook when it comes to getting people aid. So I would like to see more prominent Republican voices get the airtime to be able to speak to their audiences, because it's true that arguments from authority really work, and you have the people who you trust. And so the same speaking from the same set of talking points and the same truths is really critical, because people that are suffering are everyone's base. So really important that we change what's happening here. But it is hard to do with a national conversation eager to talk about the controversy and give airtime to the misinformation.
Just ask Chuck Edwards, the congressman from North Carolina, out with a list of rumors and just untruths that he's trying to debunk. Referring to himself as one of the mountain people. He says, while it's true FEMA's response to Hurricane Helene has had its shortfalls, I'm here to dispel outrageous rumors that have been circulated online, including Hurricane Helene was not geoengineered by the government to seize and access lithium deposits in Chimney Rock. This is the kind of stuff that's going around here. Rick, to what extent are the social media platforms, one of them owned by Elon Musk, responsible for controlling this content?
Yeah, I think that pox on everyone's house for giving air to this kind of information. I do think even normal media outlets who report things like Marjorie Taylor Greene's claims that, Democrats were able to engineer the storm, in order to only hit the Republican locations. All these things are just complete fabrications of the truth. And so at some point, I think, all of us have to get together, the media, elected officials, and others, and say, we're just going to stop giving air to this. Because every time we talk about it, we're actually, raising doubts in people's minds. Gee, well, I hadn't heard that rumor before. I wonder if there's any veracity to it. Can we believe Rick Davis and Joe Matthew? I don't know. And so, I think there's got to be a more comprehensive strategy than just sort of wagging the finger at X or a couple of these other social media outlets and say, stop this. I honestly think Congress owes it to the American people to hold hearings and start coming up with remedies to this, because otherwise misinformation is going to control the agenda every day.
Well, it's a very fair point, Rick. Of course, we probably won't see Congress do anything like that until this election is already over, as they're not scheduled to come back until mid-November, potentially still not even going to return to address any supplemental funding requests that may arise from these storms. But given that it is the election that is dictating a lot of this timeline, I do want to switch gears to the campaign, which is still underway, if not impacted by this. We just got some new reporting out of NBC, which cites two people familiar with the numbers and says Kamala Harris's presidential campaign operation has crossed the $1 billion fundraising threshold in September. It includes money raised by the campaign committee itself, campaign-affiliated joint fundraising committee that also collects for the DNC and state parties. If we look at just the financial figures, it raises the question of whether that momentum is sustaining for Kamala Harris, Laura, and frankly, what the incremental dollars still mean at this point when a lot of the ad buys are already in.
And ad buys are one thing. I would say campaign infrastructure. I think what Kamala Harris has done well, and I think it's one of her strategic advantages over the Trump campaign, is she has field offices and she's hired staff and they have resources that they're able to build out. They're also able to work with community organizations and groups that could also be deployed, and be able to reach out to voters in a trusted way. So the ability, the early infrastructure has made this money much, much more effective. But you're right, there is a limit to the impact of money. You very well may lose if you don't have it and the delta is too big, but money is not a guarantor of a win, and we've seen that time and time again. So, but I think the money is one thing, but I think there's also momentum. We see, and don't trust all the polling, but in terms of direction, she's moving in the right direction, and her media appearances this week in a narrow casted way are really making the argument to the targeted groups that she needs to continue to persuade with messages that we now see are working in terms of getting voters on her side.
Well, we can still have another debate here. I don't know if anybody thinks it's going to happen, but Rick, Fox News is raising its hand again. Fox News Media reporting it's made a final pitch to host a debate between Kamala Harris, former President Trump. Today, the executives from Fox sent letters to both campaigns. This would be October 24th or 27th. Brett Baer, Martha McCallum as moderators. Rick, is there any chance this happens if the money continues to be lopsided and the race stays as tight as it is?
Yeah, I'm pretty sure that the Trump people do not want him on the stage with Kamala Harris. She completely schooled him in the last debate. And this puts him in an awkward spot because he can't complain about the network being against him. I don't think there's any scenario where people would think Fox isn't the easiest option that he could possibly have. And if I were the Harris campaign, I would immediately agree to this debate. There's nothing they can throw at her that is going to be any tougher than what previous moderators have done, or even things like the 60 Minutes interview. So she's more practiced today than she was then. It really calls into question whether or not Donald Trump thinks he's winning or losing. If he's losing, he better get on that stage because otherwise he'll be criticized for having ducked.
Rick, we have less than a minute left, but there's another debate that's happening today in a state you know well, Arizona. Carrie Lake and Ruben Gallego, the Senate candidates, are going to battle it out, apparently on the eve of Carrie Lake voting early, which is something she didn't like in past cycles. Is that going to move the needle at all, or do you see this one as already in the bag?
Yeah, no, I think this is a pretty competitive race. Carrie Lake is behind Ruben Gallego by every poll that's been taken in the last month. So I would suspect you will see a very unhinged Carrie Lake trying to throw as much mud at the wall and see what sticks. And Ruben Gallego is no pushover. I mean, he's an attack politician who knows his way around a microphone. So I think that this would be actually pretty good entertainment if there weren't any playoff games going on tonight.
All right, Rick Davis, partner at Stonecourt Capital, and Laura Fink, Rebel Communications founder and CEO. Thank you so much for being here with us on Balance of Power and pointing out in Arizona, it's not just debate day, it's also the start of early voting. A reminder, this election is already well underway.
See, Carrie Lake is going to be doing that herself,
Indeed.
I believe, tomorrow, casting the ballot. We'll be watching right here on Bloomberg.
9:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks holding close to session highs. We are looking at a record right now on the S&P 500 index, up 33 points, 5784, a gain of 0.6%. The Dow also at a record, up almost 400 points, up 1%, up 397 right now. NASDAQ advancing 77, a gain there of 0.4%, with a 10-year ahead of the FOMC minutes at 4.06%. Those minutes coming up 20 minutes from now. 2-year, 4.01%. Spot gold down $13 the ounce, lower now by 0.5%. And a retreat today, further retreat for West Texas Intermediate crude oil, down 1.2%, 72.67 for a barrel of WTI. Generac Holdings said to be running low on portable backup generators after Hurricane Helene and other recent storms knocked out power for millions of Americans. Generac's CEO saying today many of the company's portable products sold out after Helene tore through the southeast. Generac shares, they're little changed today, right now trading higher by just under 0.1%. So again, recapping, the Dow at a record up 400 even right now. S&P advancing 33, up by 1.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
Charlie Pellet, thank you so much, and welcome to the Wednesday edition of Balance of Power here on Bloomberg TV and radio, on YouTube as well. Search Bloomberg Business News Live. You can always find our programs here in Washington and in New York. With so much attention paid to the arrival of Hurricane Milton, and that will happen overnight. A major political story, as it is a natural disaster in the making here. We're keeping tabs on what's happening in Israel, of course, one of the other major stories that we've been following for weeks. And the phone call, we understand, has happened. There was reporting earlier that some questioned Joe Biden has had a telephone meeting with Israeli Prime Minister Benjamin Netanyahu. And Kaylee Lyons, it comes against the backdrop of the wait for a response, of course, by Israel to Iran. And Israel's defense minister, Yoav Gallant, today says an attack on Iran will be deadly, precise, and above all, surprising.
Yeah, adding that they will not understand what happened and how it happened, but they will see the results.
Wow.
With a reminder that Gallant was supposed to be here in Washington today, specifically at the Pentagon, meeting with Defense Secretary Lloyd Austin, and that trip was canceled because Netanyahu, essentially, we understand based on our reporting, said, no, I'm talking to Biden first.
You pulled him from the schedule here, which is why some question whether this phone call would take place today or not. Kaylee, we're waiting for a readout from the White House and might have to wait till a bit later in the White House briefing to learn what was said.
Yeah, that briefing is scheduled to begin in a few minutes. We'll, of course, bring you any headlines we get out of that. But in the meantime, we want to turn to an expert on the Middle East. Joining us here in our Washington, D.C. studio is Mara Rudman. She is professor at the Miller Center at the University of Virginia, also director of the Ripples of Hope project, focused on democratic solutions. Mara, great to see you here. Thank you for being with us on Balance of Power. As we await the readout, I think we can still question what the tenor of this call was between Biden and Netanyahu, as we have seen borne out in recent months and in recent weeks. What the U.S. wants doesn't necessarily always matter to Israel. Do you think that will remain the case when Israel does have this surprising response that Gallant is alluding to?
So I think that what the U.S. wants does matter to Israel. It may not be determinative. Okay. And so I would just caution with that. I think part of the Minister of Defense, Gallant, coming to Washington is a signal of the closeness of the relationship, the need to talk through, to take advice, or to hear advice and to hear counsel. But ultimately, you have a sovereign country that's going to do what it feels is in its best interest to defend itself. The relationship between President Biden and Prime Minister Netanyahu is a different type of sticking point challenge. And I think that was reflected in Gallant's visit being put on hold by the Prime Minister.
Was his relationship may be overstated at the beginning of this conflict with Benjamin Netanyahu? Joe Biden used to talk about the strategy would be to hug Benjamin Netanyahu and hold him closer, to steal a phrase. Bob Woodward's reporting paints a picture of screaming, shouting matches on the phone between these two leaders. What was their relationship before it began to deteriorate?
So what I would say is, and I can't speak specifically to President Biden's relationship with Prime Minister Netanyahu, I have been in the position to observe other presidents in their back and forth with Prime Minister Netanyahu, given the long term he has had, and in and out of government. But I definitely observed moments of deep irritation, sometimes buried, sometimes not, between the presidents for whom I worked and Prime Minister Netanyahu. And I heard private comments made about the frustration, as well as sometimes some of that seeping out into their dialogues with one another. So aside from the veracity of Bob Woodward's reporting, which has not been verified, I believe, it's not hard to understand that it's a contentious relationship. It's not the only relationship like that U.S. presidents have with foreign leaders at various points, and particularly ones where the countries have the closeness of relationship that the United States has with Israel.
Well, and certainly the closeness of that relationship was on full display when the U.S. aided Israel in defending against the hundreds of missiles Iran sent toward Israel last week. So it's the response we're still waiting for from Israel to that. What is your expectation about what form it actually will take? How escalatory a move Israel would be realistically considering?
Well, I listened closely to your description of what Defense Minister Gallant said, and he strikes me as having chosen his words with great care. And the equation in the region between what various countries, and Israel's not alone in this, see as necessary for deterrence, and yet, so deterring your enemy, your adversary, and yet minimizing the degree of escalation of the conflict is a pretty precise calibration that can often go wrong. And I would expect that that is part of the discussions the United States is having with Israel, and also Israeli internal discussions. Defense Minister Gallant has not had the easiest time interacting with Prime Minister Netanyahu, nor has the entire defense establishment in Israel.
Well, Gallant went on to say that Israel saw that Iran's attack failed because they were not precise. Is it possible to impress your opponent without escalating in this case?
I think it's a definition of what escalation means and in which ways. There are a number of different ways of going at Iran, and so that's a hard question to answer, and it may be in the eye of the beholder or the eye of the
maybe why
perpetrator.
It hasn't happened yet?
I think there are a number of reasons why it hasn't happened. It's a tough call to make, and a question of timing and wanting to catch by surprise when the entire world's attention is on as well. So I think there are any number of factors. I wouldn't read too much into the length of time it's taken.
You just described all of this as being in the eye of the beholder. So it is also a question not just of how Israel is viewing the situation, but how Iran is likely to view these potentially different retaliatory actions and how Iran will respond. We frequently here at Bloomberg look at oil prices, look at the map of the Gulf and the amount of oil that is coming through the Strait of Hormuz, for example, each and every day, and question how realistically disruptive this could be to the global economy, depending on how Iran decides to make its next move. Would you expect that, especially this close to an American election, when authorities are telling us Iran is trying to be disruptive, how they would think about the potential economic impacts of their next move when it comes to global energy markets?
So Iran has its own domestic challenges on the economy as well. So there are a number of different factors that play in, as do how regional actors are going to respond other than Israel. I took note of the fact that the Iranian foreign minister, I believe today, is in Saudi Arabia meeting with the Crown Prince. So there are a lot of discussions with a lot of actors, including folks who do not have good relationships with one another. The Saudis and the Iranians are a good example of that. And a huge international aspect. The reason they're able to talk to each other is because China brokered a surprise deal about a year ago between the Saudis and the Iranians. So there are so many different factors at play, and you really have to look at who benefits and who assumes the costs. And that's a global picture, not just a regional picture.
Yoav Gallant said that they will not understand what happened and how it happened. Should we be thinking beyond a military response in this case? Could it be cyber? Could it be a diplomatic salvo that we didn't expect here that involves the U.S.? Maybe this is not simply a military response?
I think it's fair to assume it would not be solely a military response. I think even now in the calibrations going in, you see certainly diplomacy hard at work. Yeah. And there are a number of economic tools or kinetic action that would affect the economy, as well as Israel's history on cyber actions within Iran.
For them to not know how it happened suggests something other than a ballistic missile, doesn't it?
It certainly raises questions, and I assume if he was making that statement publicly, he wanted people to be thinking along some of the lines that you're suggesting.
Well, it also brings my mind to, say, pagers and walkie-talkies suddenly exploding in the hands of people in Lebanon, as we're still seeing that limited incursion into Lebanon underway. As we watch this relationship, there's still the battle being waged against Hezbollah as it continues to target Israel.
And the pagers and walkie-talkies are a great example of, because it wasn't just people in Lebanon, it was Hamas people in Lebanon, Hamas fighters, people who were affiliated with the organization. Those are the people. Sorry. Yes, thank you. Hezbollah fighters. Those were the people who had those pagers and walkie-talkies. And so it's an interesting illustration because it does fit Galam's language, right, of precise. They won't know. They won't know how it happened. So I think he is consciously opening up a wide range of thoughts or concerns or fears for people.
We're waiting for a White House briefing to start here. How public should Joe Biden be about his motivations right now on a day when he's on the phone with Benjamin Netanyahu? How much does he need to disclose here, assuming he wants to have another phone call with Benjamin Netanyahu?
Well, part of maintaining a relationship with friends and adversaries alike goes to the opposite of what you guys want, which is full, which is as much public disclosure as possible, right? You have to constantly balance, as you would when you're having any kind of tough conversation with anyone in a personal relationship. If you go out and tell the world about it or complain to all your friends, you're unlikely to get them to move in the direction you want.
Especially if your friends do not corroborate what you're saying. And that's been a recurring scenario for Joe Biden. I just talked to Bibi. Here's the deal. And Netanyahu says, no, I never made that deal.
So there's definitely a tough call to be made as well. There's no shortage of tough calls in this situation with how much you say publicly to let people know there's progress being made when you know you have a somewhat unreliable interlocutor on the other side or someone who's making different calibrations about what they're going to say publicly and privately. Yeah.
So we've covered the U.S.-Israel relationship. We've covered the Iran relationship, even with other countries in the Gulf. And you alluded to, in part, the notion that China is part of this and brokering some
China and
agreements.
Russia both.
Well, and when we talk with Republicans specifically frequently on this program who say this administration has been too soft on Iran when it comes to sanctions, a lot of the impact we see or the lack of impact is because China's still buying Iranian oil. So as we look at this picture across the world, what role does China play and what role does Russia play in what comes next?
Well, I think it's useful to bring up both of them because if you look at China buying Iranian oil, also part of the reason that Russia was able to so quickly essentially defy U.S. and international sanctions or not feel the impact was because of the side deals they had with China. And China has done it, frankly, very cleverly, sidestepping a lot of what international sanctions would be, and has given Russia the ability to be able to quickly rearm itself against Ukraine. And so China is playing as is Russia all over the world. Iran is busy giving Russia as well munitions, and Russia and Iran have had a long-standing relationship. So all of these actors are at play. It's part of the reason the United States needs to look at all elements of its national power when it's figuring out how to deal with these situations and why it needs so strongly to maintain relationships with allies and partners.
We'll be watching for the readout on this phone call. In the meantime, Mara, thank you so much for joining us and for a smart conversation, as always. Here at the table, no less, in studio, Mara Rudman, professor at the Miller Center at the University of Virginia, director of the Ripples of Hope Project, focused on democratic solutions. We thank you for a great talk here. We're hearing, Kaylee, from Kamala Harris, apparently on the phone with CNN right now, talking about this very issue.
Yeah, she says the call with Netanyahu was important. We've yet to see more specific details on what that call entailed from the vice president, but she, of course, is talking about an issue closer to home, too, as Hurricane Milton is barreling toward Florida's west coast. She says they need to buff up aid and assistance for FEMA Of course, that is a big part of this conversation, is the immediate needs that can be met and the longer term needs that will be presenting themselves as we potentially see millions affected by a once-in-a-century storm.
We're likely less than 12 hours out at this point from landfall along the Gulf Coast of Florida. Join us again at 5 p.m. Eastern Time for the late edition of Balance of Power. We'll have the latest on the storm and more on this meeting with Benjamin Netanyahu. With Kaylee Lyons, I'm Joe Matthew. Bloomberg Business Week is next.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio.
Hello and welcome to Bloomberg Business Week. I'm Katie Greifeld alongside Matt Miller, Carol Masser, and Tim Stenovec. I saw them in the office today,
but they left.
Yeah.
And now it's amateur hour. We're replacing them for the next 3 hours. We have a lot to talk about.
We do, yeah.
Mike McKee is in lockup right now, down in Washington, D.C.
Counting down to those Fed minutes, of course. We'll get them right in a couple seconds. We're also going to be talking about Boeing. We're going to be talking about Alphabet. We're going to be talking about these markets, of course, as we count down to CPI as well.
I'm pretty excited to find out the new news on Google, right? And then Boeing, the strike continues.
The strike
But it's really the Fed that's front and center right now.
Yeah, so let's get over to Mike McKee joining us from Washington on the latest release of those Fed minutes.
Well, the minutes show a divided Fed that eventually came together on a larger than expected rate cut. While a substantial majority supported a 50 basis point cut in the benchmark lending rate, some participants preferred a quarter point reduction, and a few others indicated they could have supported such a decision. Several noted a 25 basis point move would allow the time to see the effects of a rate cut on the economy, and a few argued that it would signal a more predictable path for policy. There were a range of views, the minutes say, about how restrictive the Fed actually was. Almost all agreed upside risks to inflation had diminished, and most felt downside risks to employment had increased. A couple did not see an increased risk of significant further labor market weakening. Several, however, cited risks of sharper than expected slowing in consumer spending should hiring slow. The vast majority, however, did see inflation risks as broadly balanced. There was agreement that it was important to communicate that the recalibration of the stance of policy at this meeting should not be interpreted as evidence of a less favorable economic outlook or as a signal the pace of policy easing would be more rapid. Several also stressed the importance of communicating the ongoing reduction in the balance sheet would continue for some time, even as they cut rates. Matt and Kate?
And so we knew that there was going to be division. Of course, we had a dissent at the latest meeting. So interesting to see that sort of solidified in these minutes. Taking a look at some of the headlines here. Of course, as we knew, some officials would have preferred a smaller rate cut, but most officials thought that risks of higher inflation had diminished. That was really the thesis of the markets, too, the consensus in the markets. We did see a little hiccup when it came to the average hourly earnings growth that we got last Friday. We have a big CPI report coming up tomorrow, Mike. I mean, what is the setup heading into 8:30 a.m. Eastern?
Well, at least if you go by the minutes, most members are thinking that the inflation rate should continue to fall and that the risks that it would rise again had diminished. That's basically what's being called for tomorrow, a 1/10 of a point reduction in both the headline and the core. And if that's the case, basically it's something of a permission slip for the Fed to focus on employment in making its next decisions. And the risks at the time of the meeting, of course, were tilted towards the employment, towards labor markets. Of course, then we got last Friday the big jobs report. So it would be interesting to see how or whether anybody had changed their minds about the risks given that.
Can we glean, Mike, from these minutes what the Fed might want to do, what some might want to do, or several, a few, couple, perhaps the vast majority, after we've seen these updated jobs numbers, better than any economists in our survey had expected, with revisions higher for the last 2 months?
Well, you really can't take any future forecasts out of these minutes because of the fact that we did get that big jobs report, and we do see ongoing strength in the economy. The GDP now number from the Atlanta Fed, 3.2% as of today for the third quarter. And if that's the case, then it was suggested if the economy is still growing strong and the neutral rate has moved up, they would want to do 25 basis points at a time as opposed to 50 basis points. There was no talk that they would suspend cutting interest rates, but at the time, of course, they hadn't seen these strong numbers. So it's going to be an open question. We'll have to listen to Fed officials as they speak between now and November and see if any of the numbers start to change their views on whether they should be cutting. But if they do cut, it does seem that most will be favoring going forward 25.
Yeah, let's talk about, of course, that November Fed meeting. We had a great conversation on open interest with Esther George, of course, former Kansas City Fed member there. And I know that you've spoken to her about what the neutral rate is. She thinks it should be slightly higher. We also got into a line of discussion about whether or not this could be a stop and start rate cutting cycle, whether or not we actually could see the Fed not move at all in November. I mean, Mike, what do you make of that?
Well, I think you would have to see a rise in inflation, something that would catch people's attention, or another extremely strong jobs report. But that's not likely, given what we're seeing with the hurricanes. The damage to the labor market, according to back-of-the-envelope calculations by J.P. Morgan Chase, is that we could see about 120,000 jobs taken away just because of Hurricane Helene. We haven't even had Milton hit land yet. And then, of course, you got 38,000 Boeing workers on strike. So put those two together, and you would have had a negative print had we come in at the level that had been forecast for September. So you've got a danger of a really low or negative number for the month of October. Now, the Fed would look through that, but with the American public, how would that play 2 days after the election? It's going to be a lot for Fed officials to think about.
We are getting inflation numbers tomorrow. The Consumer Price Index, which is not the Fed's preferred gauge, but does still have a wide following in the markets. We're expecting, I think, 3.2% at the core, 2.3% for the headline number. What will drive this number, Mike, tomorrow? What are the pieces that you're going to be pulling out of it as we get the report?
Well, generally what we have seen is an ongoing reduction in energy prices, and even though oil prices have gone up over concerns of the Middle East, we haven't seen that reflected in gasoline prices yet. So, and of course, the Middle East has only gotten worse since October began. So it's probably going to be energy that is one of the biggest contributors to the downside. But we've also seen weakness in airfares and hotels and things like that as we get into the school year, and a lot of travel sort of falls off. Used cars, new car prices have been going down. That may continue as well. But in general, what we saw the last time was a sort of broad decline in prices, and that gave even more hope to Fed officials as they looked at the inflation numbers that they were on the right track.
All right, Mike McKee joining us from Washington, D.C. Come back to New York. We need you on the desk, of course, for those CPI figures coming at 8:30 a.m. Eastern. In the meantime, of course, let's transition to another story, Matt. And, you know, we talked about this.
We've talked about it so many times.
So many times.
We continue to get this story on the Bloomberg terminal. The U.S. government is considering asking a federal judge to force Google to sell off parts of its business. The last time we had this story, it was People Familiar. Now the the department.
We've got a filing.
Has confirmed it. Of course, there are other options as well, and we're not going to get even the beginning of this part of the trial until spring of next year. But I want to bring Leah Nyland as well as Mandeep Singh from Bloomberg Intelligence here to talk about this. Leah, we've got, there's a lot of time between now and when I guess, sentencing, maybe not the right word, but this part of the trial is gonna start. What kind of breakup is the federal government gonna go for?
Yeah, so that remains a question we'll find out next month. So what they filed yesterday was what they called sort of the menu of options that are on the table for the judge. And so at the one end is a breakup, and they have said that they may consider asking for forcing Google to sell off either Chrome, Android, or Play. And probably if it was Android, it would be Android and Play, because Android is the operating system and Play is the the app store that goes with Android. And that's sort of like the extreme end. In the middle, they sort of had these options to sort of force Google to share a lot of the information it scrapes from the web to make its underlying search results. And the government said that if they do that, that could be used by other search engines. It could also be used by AI startups who sort of need this data to sort of create their models. And then the sort of like wimpiest one is, just sort of ending the contracts that the judge found to be illegal. These are the ones in which they paid other companies like Samsung and Apple billions of dollars to make their search engine the default. So these are our options, and they're going to officially, set down what their request is in November. And then the judge is going to let them do some more discovery, asking Google some questions about how this would impact their business. And then we have our mini trial in April. And then the judge said that he will issue his decision by August of next year. So we still have, how many months is that? 8 or 9 months before we get to the end of just this part. But yeah, it's a big deal.
A lot to look forward there to. Mandeep Singh, come into this conversation. You take a look at Google shares right now, currently off by about 2.4%. When we were looking at it in the morning, which feels like a long time ago, it was pretty much unchanged, but now taking a leg lower. I mean, put this into context for us. Of course, there's a lot of wood to chop before we get to any real action, but how much does this matter to Alphabet? How much does this matter to Google?
I mean, look, some of the remedies that were suggested in terms of forced sale of Android or, some of the businesses that they own Chrome browser, I think is just so unlikely simply because the way Google is run, it's all one shared infrastructure that's powering YouTube, that's powering the browser, that's powering the cloud business. How do you take an entity out? And so the one, I guess, area where there's another lawsuit, DOJ lawsuit on the ad tech.
There's so many lawsuits, dude.
Yes,
there's one on the ad tech marketplace. There's a bunch of states that are suing. They want Google to pay for telling you how to switch your browser. There's the EU. Obviously, Margaret Vestager is going to decide by the end of the year. She says breaking it up is the only solution she can imagine. I'm forgetting. There are other lawsuits.
Yeah, there's
here.
a bunch.
Yeah, there's
and
at
the
least
common
5.
thread I find across all those different lawsuits, the most commonly pointed issue is their ad tech stack, which is where I feel like you could make a case. Why does Google own, the supply side ad platforms, the demand ad platforms, the marketplace? And then it has a pricing advantage. Everyone can see that. And that was built on their DoubleClick acquisition back in 2007. So you could say they didn't build this organically. It is something they acquired. And then over time, they really had an advantage. But that's
They tuned it up.
They did. And that you could say that even Android was an acquisition. YouTube was an acquisition for Google. So they've tuned all these things up over time. But I think ad tech is the one that is the strongest or the most convincing, at least to me, out of all the things they are offering as remedies. I can't imagine, Google forced sale of Android or, all these products that are integral to their LLM strategy. I mean, that's the future. So
Leah, what do you think? I mean, first of all, we haven't seen a big breakup in the U.S. since, none of us was born except for me.
Not even, okay.
When Ma Bell got broken up. And then, second of all, this is like a national security issue. Not only is Google dominant in search, but America's Google is dominant worldwide. Do you ever talk to anybody in your reporting who says, Google is a champion? How could we break it up?
That is a point that Google likes to make, that by breaking it up, it might make it less competitive, particularly against China. I will tell you the antitrust enforcers are not particularly persuaded by that. They don't like the idea of supporting a company simply because it's a national champion. I mean, America's competition policy is built on the idea that the more companies we have competing, the better products and services we have for consumers and for other businesses. So they would say, maybe we don't really care that this makes Google a little bit less competitive globally. We want there to be other businesses.
And I'm just curious, I mean, as a reporter, you cover antitrust, you cover, of course, the DOJ, you cover the FTC. It just feels like the antitrust landscape over the past few years has really gotten more aggressive, more emboldened. And I mean, just talk to us about that, about how your beat has changed before your eyes when you think about, I don't know, just the last couple of years.
Yeah, I have been on the antitrust beat for 12 years, and I have to say, when I first started, I never expected that the stories I was covering would be on the front page of the New York Times. Definitely, the Biden administration really took this as the thing that was going to differentiate themselves from the Obama years, because the Obama years were sort of seen as very beholden to business. They didn't do any of the things against the tech companies, and they feel that that was a big mistake. So Biden brought in a trio of very aggressive enforcers, Jonathan Cantor at the Justice Department, Lena Khan at the FTC, and Tim Wu at the White House. Tim is now gone, but Lena and Jonathan are still there, and they are still making moves. The Google trial just ended a few weeks ago. They just sued Visa, and the FTC, just sued a bunch of the pharmaceutical benefit manufacturers. So they have been more aggressive in the past 3 years than people had been in the last 4 decades. It's very much a conscious decision on their part to sort of reject the more laissez-faire capitalism that they say was brought in by the Reagan years, and they feel did not do very well for the average American consumer.
And Leah, I think we're 26 days away from the presidential election, if you can believe it. And it's, I mean, especially among the Wall Street firms that we talk to, the Wall Street guys and gals that we talk to, there's been a lot of frustration that it feels like you can't get a merger done, that with this FTC, with Lina Khan in charge, it's been really, really difficult to get any deals done. At the same time, J.D. Vance, we know, has had nice things to say about Lina Khan in the past. When you think about the
what does that mean, that J.D. Vance loves her?
I don't know. I want Leah to weigh in here, because you think about the change in administration, even if Trump wins the White House, I mean, are you expecting much change when it comes to the antitrust beat?
It's a little bit hard to say, but the answer is not on tech, because a lot of these cases, including the one that we're talking about right now, Google, was actually brought during the first Trump administration. So the Trump administration and Republicans like J.D. Vance really don't like the big tech companies. So I can't really see them pulling back on any of the cases that the Biden administration brought against the tech giants. Where you might see change is definitely in the merger area, because you do hear a lot that while the Republican folks maybe like what Lina Khan has done on big tech, they're not as thrilled with what she has done in the merger area, sort of chilling mergers and making it more difficult for businesses to sort of go about their regular business.
I want to also point out that being on the Bloomberg top page is just as good as the front page of the New York Times, Leah. So you should be proud of the entirety of your career here. Mandeep, I want to ask you about the stock, obviously, at Bloomberg Intelligence. Most people are going to follow your research to see how that does on the equity side. It's up over the last 5 years, 170%. It hasn't done great this year compared to the S&P, but compared to the other FANG or Mag 7 stocks, minus NVIDIA, it's holding with the pack.
Well, I mean, I think there is a clear overhang when it comes to the antitrust side of things and the scrutiny that Alphabet gets. But when you look at the sum of the parts, even in a worst-case breakup scenario, you could argue the sum of the parts for Alphabet is way more than its current valuation, and it's just driven by the fundamentals of the cloud business, the YouTube business, the fact that they have a native LLM advantage that even Microsoft doesn't have. Microsoft is reliant on OpenAI for the LLM. So I think given everyone is so fixated on generative AI and LLM, that's why all these products are core to Alphabet as a franchise, when it comes to them deploying their LLM on the cloud or on Android. And I think it's a huge competitive moat.
All right.
Okay. Thank you very much, Mandeep Singh, coming to us from Bloomberg Intelligence, and Leah Nyland, sometimes on the front page of the New York Times, maybe, but definitely on top go, Bloomberg News.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Sources tell Bloomberg Stellantis CEO Carlos Tavares is planning a deep management reshuffle in response to the automaker's disastrous profit warning. Stellantis is the parent of Chrysler, Jeep, and Fiat, among many other brands. Stellantis shares, they are advancing right now, up by 2.1%. U.S. stocks trading at a records. We have got the S&P 500 index up 25 now to 5775, a gain of 0.4%. The Dow up 331, up by about 0.8%. NASDAQ now up 53, a gain of 0.3%. 10-year 4.06%, 2-year 4.00%, gold down 0.6%, 26.05 the ounce, and West Texas Intermediate crude retreating now by 0.5%, 73.24 a barrel on WTI. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charles, thank you very much. Now, we've been talking about commercial real estate as if it's the next shoe to drop for a couple of years.
Oh, yeah.
And even lately, we've gotten sort of warnings from people involved in the industry. I think
Khosla, for
exactly. Victor Khosla, the founder of credit investor Strategic Value Partners, recently said there are problems galore. He says there's a tsunami coming, but he's talking specifically about office, right?
U.S. offices.
And there's not only big regional differences, but also, if you are investing in student housing, you're doing fine right now. Medical is, still obviously a thriving business. So let's bring in an expert right now. Mark Gibson joins us in the Interactive Broker studio here at 731 Lex. He is the America's CEO of Capital Markets for JLL. I know them as Jones Lang LaSalle. Have you gone through an official name change? Is it just JLL now?
JLL.
Okay, so, but you have really an incredible seat from which to watch all of this that's going on. Where would you say we are? Say if it were a baseball game, right? And, the fall of commercial real estate was in which inning would you say?
That is a hard question to soundbite, Matt. But let me back up for a minute, because you started out with a tsunami of issues and you limited it to commercial office. But in reality, when you step back a minute and you look at, in general, what has occurred in commercial real estate, and there has been some cynicism around, any kind of risk that might be out there for a financial institution, systemic risk, or things like that. But in reality, what has caused this is a fast increasing cost of capital. So the demand has largely been there, including, ironically, in office.
Although it's shifted, right? It's come out of the city centers and gone out to urban.
It's
suburban.
actually reemerging, and it is very different story geographically, so it's hard to soundbite it and talk in global discussions. But in general, it hasn't been a demand issue from a commercial real estate standpoint. It's been a cost of capital issue. So when you think about the Fed's recent actions, and you're an investor, and you're worried about inflation because you're concerned if you invest today and the cost of capital increases, you might look somewhat early. So you want to wait and see if that's really going to be conquered. The investor community today believes the Fed is indeed going to conquer inflation. Okay? And it may take a little bit longer because we have government stimulus in terms of building back infrastructure and things like that. But generally speaking, monetary policy has worked. And so then when you have a normalizing yield curve, so if the issues, and there have been limited relative to what was discussed earlier in the year, problems in commercial real estate because demand has not waned. It was due to the cost of capital. When that starts reversing,
right,
then real estate, by and large, and it's different for different product types, self-corrects.
Yeah, well, just focusing on U.S. office, it's interesting to hear what you're saying, that this is a cost of capital problem, because some people might make the argument that, no, this is structural. Life changed during the pandemic, and the U.S. office market is different now. There's people who, are doing hybrid work, and that's a trend that's here to stay. It sounds like you're making a different argument.
No, I think it's a valid point. I do think that what I was talking about is in general. Commercial real estate was thrown, to Matt's point, into one basket and discussed globally, which you really can't do. You have to back it down by product type. But on office specifically, the data would suggest otherwise in terms of what is currently happening now. So when you look at occupancy by card swipes and you look at the vibrancy of New York, for instance, and you see what is happening in the marketplace, it's a very different story than what we have been talking about for some time. So we think that office
it's not as bad.
Going to have issues.
It be.
Well, it is of all the product types, it will have issues for a host of reasons. We don't have time today to really go through it, but it will have more issues than other sectors in commercial real estate. But nonetheless, it's not where people believe it is from a distress standpoint. There's going to be quite a bit of distress in the space, but it'll be a have and have not scenario. The better buildings are doing quite well. In fact, some of them are doing better than they have ever done in U.S. history, and then others aren't. So of all the real estate classes, it's the largest divide of have.
At the same time, it seems like there's a flood of capital that wants to get in. We talk about private credit more often than we talk about commercial real estate. Is there so much money there looking for a home that it helps ease the blow a bit?
Yeah,
soften the blow?
it's a good view, Matt. What really is happening is there's no lack of liquidity for commercial real estate. And the fact of the matter is, if you buy good real estate and you don't over leverage so you can survive cycles, it goes up. And it's a good long-term store of value. So people are looking at the right entry point to get into commercial real estate across the board. There's no lack of liquidity. It's been the cost of that liquidity that has been the issue of late. But now we're having you said a light switch went on. It almost is a light switch in terms of what has occurred. So the amount of capital that wants to invest in commercial real estate is substantially higher than it was. And at the same time, you have people that are looking to absorb that capital and are willing to accept the cost of it and the various risks. So we're seeing a bid-ask gap narrow, which is why transactional volumes have been muted somewhat in commercial real estate. We're beginning to see that tick up.
And we have only about a minute left with you, Mark. We have to have you back for a longer conversation, but talk to us about magnitude when it comes to the cost of capital coming down. Of course, the Fed has started on their rate cutting cycle. A lot of questions about the trajectory, though. I mean, how much do rates have to come down before you really see activity accelerate broadly?
I don't think much, Katie. It's a good question. Real estate investors tend to look longer term, so they're looking at the 10-year bond versus necessarily the short end of the yield curve. But nevertheless, as you see a normalizing yield curve, you will have more transactional activity. We're already beginning to see it, but no one is betting on that to have any significant impact across the commercial real estate industry.
All right, Mark, great conversation. Really appreciate your time, of course, joining us in studio. That is Mark Gibson. He is America's CEO of Capital Markets, talking to us about real estate, the commercial real estate market, the cost of capital, that 10-year Treasury bond currently camped out at about 4%. Meanwhile, let's get over to Shonali Bassick, standing by with a big guest.
Thanks, Katie. I'm standing by with Jim Esposito, who is now the president of Citadel Securities. He's only 6 weeks on the job. He's the former co-head of global banking and markets over at Goldman Sachs, now joining what a lot of people consider to be a large rival. And, when you are here now, you knew a little about Citadel Securities before, obviously, in your prior role. But what now that you're inside? I know just 6 weeks on the job, but what is different here than there?
Sure. Thanks, Shonali, for being with us at our flagship macro conference here in New York. I'd call out two things, early days for me at Citadel Securities, as you pointed out, that are starkly different than my previous existence. The first would be just the operational scale and efficiency that Citadel Securities currently operates at. I know when you talk to all of the large banks, they are very desirous of trying to find ways to leverage technology, use AI, machine learning, computing power in order to reduce their operational expense and complexity. That's very much on the come from the larger banks. I would humbly submit to you, we've already achieved that objective. Now, the best way I can demonstrate that to you, if I look at the number of client tickets and trades that we write each and every day at Citadel Securities, I would put forward it's a greater number than the largest banks. And against that backdrop, Citadel Securities only has 1,700 employees. So operating at scale has already happened for us. The second thing that I would have to call out is just the awesome collection of talent that we have. I've probably met more PhDs and math Olympiads in the past 6 weeks than I have in my entire career. We are a talent magnet. If you excel in mathematics, computer science, statistics, these folks want to come to Citadel Securities. We believe we have some of the most complex financial problems to solve. People are attracted to that, and they want to be surrounded by other bright people in their fields.
You know, it's interesting. You spent a long time at Goldman. I do want to talk more about talent because that is pretty fascinating what you just said. But after so long at Goldman, how does it feel to compete with your prior employer?
Yeah, no, I appreciate when I got hired, it makes for a nice news story that somehow Citadel Securities hired me to directly compete against the largest banks. Again, early days for me at Citadel Securities, I would put forward at the moment, I'm finding much better opportunities to partner with the largest banks. You think about the challenges that large banks have, they're all looking to reduce single party concentration risks that they have. They're looking to reduce some of their complex risks. We're in the risk management business. And so partnering on risk transfer with the largest banks is very much on our firm's strategic agenda. I've been spending a lot of my time with the largest banks, and we're engaging in that activity at the moment. I should also call out, I believe there's an enormous opportunity for us servicing and partnering with mid-tier banks. When you think about the large number of mid-tier banks that currently operate across global equities and fixed income, they need to service their end user client. We're going to be an awesome partner, providing them liquidity, providing them access to tight pricing where they can maintain their clients. We're a little bit less interested in covering mid-size and smaller clients. So partnering with banks at the moment is much more interesting than directly competing with them.
You know, it's interesting. I talked to a lot of trading desks in the run-up to the interview with you, and when I asked what they would want to know is, okay, well, it's interesting. Citadel Securities used to be very, very known strictly for its technology, but you've been adding so much talent here recently, particularly from the large banks, Bank of America, Citigroup, and Goldman Sachs. Where do humans play and where does technology play? How do you think about talent here at Citadel Securities?
Look, I think we are a talent-driven organization. So if you think about the success that we've had on exchange market making, innovating and providing a better experience for the U.S. retail investor, that's a combination of that differentiated human capital combined with levering technology. And so we've built very good risk-taking skills, very good risk management skills. Now the question for us is, where else in the capital markets can we deploy these skills? We very much want to be Citadel Securities in more places. There's ample room for growth internationally. Our business is a bit skewed to the U.S. at the moment, so growth in Europe and in Asia. And then you've seen there's parts of the capital markets that we're building out. I would call out investment grade trading, global interest rate trading, and so that's very much on our mind at the moment.
You know, it's interesting as well. You mentioned math Olympiads, PhDs, kind of an excessive level, if you will, here of technical talent. Is that the future trader? You know, if you think about the trader of the future, is it more and more along the lines of that math Olympiad?
Yeah. So for us, I think it is. I think our model might be different than the big banks, and I think there's places where both can peacefully coexist. We're always going to be driven by that differentiated human capital. We're going to continue to lever technology, and we believe the more flow that we can capture, the tighter pricing we can provide, we'll have an ability to systematize and monetize those trading flows the exact same way we've done in the equity market. So we want to take a page out of the playbook that we've deployed so well in equities, and now we're going to start to run that same play across different parts of the fixed income markets.
Well, maybe double down on that a little more, because to your point, Citadel Securities had been known to be such a large retail market maker in the equities world, but you're diving more and more into the institutional business, you're competing more in credit. How far does that push go?
Yeah, and you're right. And when you look at our volumes, about a third of the volumes that get traded on the New York Stock Exchange happen through our platform. Close to 25% of all U.S. equity volumes come through Citadel Securities platforms. We have dominant and impressive market shares at the moment. And so now when we look at what we've done, we see the exact same opportunity to do that in the investment grade trading markets. We've stood up an investment grade trading business. At the moment, we're doing the most basic things. We're trading cash corporate bonds. You'll see us in the coming months start to do more complex activities in credit. The next thing on our agenda is start to trade in portfolio form. Our clients engage in large portfolio rebalances of investment grade credit. We're not doing that activity at the moment, but we see no reason why we shouldn't excel. And so you'll see us filling in different products in our product suite as we play forward.
Jim, you know, another thing that's interesting, I spoke to your colleague Peng Zhao a little earlier about this idea about whether to go public or not. How do you think about that possibility for Citadel Securities? This has been kind of long under the surface for a question for you guys.
So I don't want to bury the lead. There is, at this moment, zero discussion about Citadel Securities going public. You know, when we look around the globe right now, the leadership team's time is just focused on executing on a large number of strategic growth opportunities and initiatives. So that's our focus. Now, as you're aware, in the past, less than 3 years ago, we did take a venture capital investment from Sequoia and Paradigm. They've been terrific partners. Sequoia sits on our board of directors. They're providing us with strategic advice and guidance. Could things change in the future? Are there different things we could do with our capital structure? Possibly. But at the moment, no discussions, no thoughts about going public.
Now, a big moment ahead. We have less than 30 days until the U.S. election. I spoke yesterday with Ray Dalio, founder of Bridgewater Associates. He said there could be election uncertainty even well into January, particularly in November when it's kind of unclear here how soon investors and America will get a sense of who the next president is. How are your clients preparing for that uncertainty?
Sure. I think our clients, I wouldn't say are in risk-off mode, but I think everyone's operating at the moment with a very balanced risk position. They want to get this election and the election certainty that comes with it behind them. And so until we get to the other side, I think you'll see, somewhat moderate trading activities. Ours is a business that benefits not from taking directional risk. We benefit from volumes and volatility. I think you could expect that we may see that type of scenario. While we're not rooting on election uncertainty in our business, volumes and volatility tend to be very good for Citadel Securities.
Well, it's interesting. We saw the VIX hit past 65 earlier this year. It's nowhere near that levels now, but still moderately elevated. How volatile can things get?
Look, I think, we'll wait and see. There's no expectation we'll go anywhere back to that level of volatility in the VIX, but I think, any possible outcome is something we're risk managing, we're thinking about, we're stress testing our own risks, and we're very focused on the reliability and durability of our platform. We know our clients rely upon us in times of stress, in times of high volatility and volumes. That's when we want our platform to excel and perform, and that's what's really on our mind at this moment.
Jim, we have to leave it there. Thank you for your time. That is Jim Esposito. It is his first interview as president of Citadel Securities. Matt, Katie, back to you.
All right, you were listening to Sonali Basak speaking with Citadel Securities President Jim Esposito, of course. Really interesting conversation there. Let's get over now to Charlie Pellet for a business news flash.
All right, thank you very much, Katie and Matt. We have got the Dow, the S&P, NASDAQ. They are all pushing higher. Traders gearing up for key inflation data tomorrow morning, 8:30 a.m. Wall Street time. The CPI report, complete coverage on Bloomberg television and radio. Stocks, though, at a record right now. The S&P up 31, 57.82, where we stand right now, a gain of 0.5%. We've got the Dow advancing 369 points now. The Dow up 0.9%. NASDAQ Composite Index up now by about 86 points, higher by 0.5%. 10-year now at 4.06%. The 2-year 4.00%. Spot gold down $13 the ounce, down by about 0.5%. And West Texas Intermediate crude oil down 0.2%, 73.41 for per barrel of WTI. Rio Tinto Group has agreed to buy Arcadium Lithium in an all-cash deal valuing the U.S.-listed miner at $6.7 billion. Today, Rio is down 0.4%, but shares of Arcadium, they are surging by 31%. Recapping stocks higher, S&P up 31 at a record up 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charles, thanks very much. Charlie Pellet there with your Business Flash. Markets looking up, 57.82.
Not bad.
On the S&P 500. And the Dow Jones Industrial Average.
What's that?
42,455. So we're looking at some big gains today, almost 1% on the Dow, 365 points.
Doing well?
The Russell 2000?
No, Boeing. Holy moly.
Oh, I see. Yeah, well, I was going to say the Russell 2000 can't be doing too badly, and I'll actually pull it up and tell you that it is currently, wait, no, I won't here. The Russell 2000 is currently up 0.2%. But you're right, Boeing has been having problems for a while. I mean, they bled $8.2 billion in the first half. They're losing $1.5 billion a month as long as the strike goes on. They already borrowed $10 billion extra this year, and Bloomberg's reported they need to borrow or actually sell equity for another 10 or 15 billion later.
Yeah, and you have S&P Global through all that saying, we still might cut you to junk, of course, and making things much more painful is the fact that that strike is still going on. Of course, production has been shut down at their West Coast manufacturing hub for nearly a month now. Just a terrible, terrible year for Boeing. Let's talk about it now with George Ferguson. He, of course, is senior aerospace and airlines analyst for Bloomberg Intelligence. And you take a look at the latest TikTok for what's going on with the strike. So Boeing, it withdrew the contract that it had offered to the unions. It just feels, George, that these sides are very, very far apart. Give us some context on how bad this is for Boeing, given that they were already having a painful year. Now, of course, their workers have been on strike for a month.
Yeah, I mean, their recovery is built around, building, or was built around, I should say, building a lot more airplanes in the second half of the year after the problem with the door blowout on the MAX earlier this year. I think as we left 2023, it looked like a recovery was at hand. But then you had that door blowout, and then that delayed a whole bunch of manufacturing in the first half of the year that investors were counting on. And now the second half of the year starting to look like or feel like a bust, right? Because the union is going on strike, and it seems like the negotiation they aren't just far apart. The negotiations over a new contract that sound dysfunctional at this point, right? I mean, it reminds me of the companies that offer a discount to you, and they're having a hard time selling a product, and they tell you it's going to go away on a certain date, so Boeing withdraws their offer, but that offer still stands, right? If they would go to 30% once, they'll go to it again, and we just watched the port employees, we watched them get, 60% over 6 years, 10% a year, so Boeing workers want 40% for 4 years. It seems like it's going to be really hard to keep them from that objective. So it feels like things have gone not only bad, but dysfunctional in the negotiating.
Surely they want more. I mean, they watched the longshoremen, which, I mean, they essentially had us over a barrel on that one. They were going to get whatever they wanted. Boeing employees don't have the same kind of leverage, right? Because you don't have the entire country needing them to make more planes now. And Boeing can do as badly as it wants. The U.S. government isn't going to let it fail. They want something, though, the union workers, that the airline, that the plane maker isn't willing to give them. They said they have made non-negotiable demands. Do you know what the union is asking for that Boeing is saying, like, no way, Jose?
No, they're not letting me in the room, but one of the items I have seen is they want to go back to a defined benefit pension plan. I hope that's not non-negotiable, but again, I think don't you always couch things in those terms when you're in the middle of a negotiation, right?
But I mean, no one's going to get a defined benefit pension plan. It's, we live till we're like 90 now. This isn't the 40s. I mean, that's just impossible to pay for. No one could afford that.
Ask General Motors management. I know. I mean, that was the downfall of many great U.S. industrial company, and so agreed, I don't think we're going back there. But look, it's always, you can always posture yourself there as you're looking for a sweetener on the 401k or something like that, right? But again, they're not even up to the 40% increase in salary, which I think is almost in the bag, right? It seems like the longshoremen, I hear you, the longshoremen had the whole country over a barrel, but I feel like Boeing's machinist union has Boeing over a pretty hard barrel right now.
Yeah, it certainly feels like it. I am curious, though. It feels like Boeing kind of poisoned the waters when they went directly to union membership, sort of bypassing the leadership. It seems like that kind of backfired on them, George, because it seems like actually the membership then just sort of got closer to the leadership.
Yeah, I don't know what the calculation there was, right? Because the initial offer was 25%. As I understood it, union leadership kind of told the rank and file, hey, you ought to vote, you ought to approve this one. The rank and file said, no way, we're not taking 25%. And then Boeing management decided a good thing would be to go around the leadership on the 30% offer. And so, yeah, I think you're right. I think they're just driving those two parties together. And that's, I think, not what you want to be doing in the negotiation.
It seems really dumb, but it wouldn't be the first time that Boeing management has done something super dumb, right? I mean, this company just doesn't act like it needs to make money. How important is it? You know, if they can raise $10 billion every half, does it matter?
Well, look, you can't raise money forever. Look, I know they're a defense contractor, so there's a lot of people in the marketplace that say, look, the government might, never let them fail.
They're one of only two plane makers in the whole world.
Embraer, they're coming up, but...
Well, one of only two big plane makers in the world, but Embraer doesn't fit this niche. It doesn't mean you can't go through bankruptcy, right? We watched General Motors go through bankruptcy, under the Obama administration. They did a quick run through bankruptcy. Everybody said General Motors would never survive. Everybody said the government can't let them go bankrupt. There's too many workers in the Midwest that'll be affected, but it did, right? So for investors and for creditors, that's not a good day, right? Those are bad times. And so, yeah, I mean, it doesn't mean that things can't get worse and you can't go through those kind of episodes, right? So I think that I think the company, I think they probably have to get a little more realistic here about what they're going to have to give this union. I mean, these people make custom aircraft, right?
Mm-hmm.
Aircraft are not like in an auto plant. You don't build 400,000 of them a year in a single plant. Everything isn't automated out to the nth degree.
Right.
The suppliers don't bring everything to the floor just ready to bolt in. These are really skilled workers.
Right.
You can't replace 33,000. I don't think you could replace 33,000 in a decade, right? And
yeah, George,
you'll need a lot of trainers. They need these people.
All right, George, you got to leave it there. Really appreciate your insight. That, of course, is George Ferguson of Bloomberg Intelligence. Meanwhile, we do have some breaking news from Apple. That is Dan Riccio is stepping down after more than 26 years. He was the former hardware chief. He oversaw the Vision Pro, the headset group, now to be overseen by hardware head John Turnus. So some interesting changes over at Apple.
listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, welcome back to Bloomberg Business Week. I'm Katie Greifeld here with Matt Miller. We are keeping the seats warm for Carol and Tim, who are on their way to Los Angeles for the Bloomberg Screen Time event. But in the meantime, let's train our eyes over on what's happening in Florida. Of course, preparing for the landing of the Hurricane Milton, of course, 2 weeks from Hurricane Helene. Let's talk about it now with Lauren Rosenthal. She is Bloomberg News weather reporter joining us. Lauren, first of all, give us what happens between now and then. We know that there's 6 million Florida residents who are being urged to flee from Milton right now, of course, before it touches down, which is expected to happen overnight.
That's right. Over the next few hours, it's possible that we'll see Milton's top winds come down somewhat, but it is still expected to be a very strong hurricane when it makes landfall overnight. We are going to see this storm likely grow in size, and that is not good news for Florida. I was speaking with the deputy director of the U.S. National Hurricane Center earlier today, Jamie Rome, who said that the larger the storm, that's going to translate to more surge, more water being pushed over land and inundating coastal communities. This is likely to be the most storm surge that Western Floridians have seen in their lifetime, just partly why there's so much urgency around the evacuation orders.
How does the evacuation look? I mean, typically there are people who say, I'm going to stay here, I'm going to tough it out, this is my home. But when a storm surge can engulf, a 2-story house, that seems really like a really bad decision. So have we seen most of the people in Tampa, for example, leave? It's a huge metropolitan area.
Yeah, the population of the Tampa region's a little over 3 million people. We're being told that the Hurricane Center is trying to issue really tailored warnings about where the surge is expected to be the worst, which enables emergency managers to issue more tailored evacuation warnings. So they're hoping it translates to a more orderly evacuation without people getting, stuck on the roads, and hopefully that folks will heed the warnings that they're issuing. I think at this point, it's just a matter of paying really close attention to the messages that you're getting from public safety officials. I think that, with the hours ticking down until the storms arrive, likely we'll be seeing anybody who's, chosen to stay behind, shelter in place. We know that there are lots of shelters open in the Tampa region, and emergency managers have also urged people, if they are going to stay in the area, to at least come to those shelters. Then if they have a medical emergency or need any kind of assistance, there's a better chance that, they'll be able to get that help rather than wait for roads to be cleared after the storm passes.
Right, Lauren. And to that point, we actually heard from Florida Governor Ron DeSantis earlier, who said that total shelter capacity, or occupancy rather, statewide was at about 31,000. The total capacity is for 200,000. So, of course, Ron DeSantis urging people to go to that shelters if they haven't already evacuated. But I want to talk a little bit about the geography of Tampa. My understanding is that it's on a continental shelf of sorts. Talk us through that dynamic and how that's going to interact with the hurricane.
Yeah, by contrast, the east coast of Florida, really, really deep water, almost immediately offshore. So I was talking with someone earlier today, said, I'm a fisherman. I can, take my boat 5 minutes. I'm in the jet stream, right? If I'm on the west coast of Florida, by contrast, he said, I'm sailing for 2 hours to try to get to that deep water. That shallow water is really easy for a storm to pick up and push onto land. It does not need to be that strong. And larger storms, which is what we're expecting Milton to evolve into over the next few hours, can push more water ashore. So that's why the risk from this storm in particular is so high. And we're going to see some really stunning and likely record-breaking storm surge figures roll in for Western Florida.
Lauren, one of the things I've been wondering the past couple of days is, how has Tampa avoided a direct hit for the last 100 years? I mean, the conditions seem bad, and yet we haven't had this kind of storm for Tampa.
Yeah, it's something that we've been talking a lot about and doing more reporting on here. This is a relatively unusual storm track. There's going to be a lot of research, I think a lot of science coming, over the next few years about exactly how this happened, because Milton is not the first storm to have an impact on Tampa. Hurricane Debbie, earlier in the summer, Hurricane Helene didn't notch a direct hit, but it still sent 8 feet of water into Tampa. We know that Milton is going to pass much closer. That there has been concern about Milton making landfall in Tampa. So that's why we're expecting to see so much more water. But yeah, as far as how Tampa got so lucky for so long and why that luck has come to an end, there's going to be a lot of research into that.
All right, Lauren, really appreciate your reporting, of course, as we continue to track Hurricane Milton, expected to land near Tampa this night. That is Bloomberg News weather reporter Lauren Rosenthal. Meanwhile, you take a look at markets right now, of course, about an hour or so until the close. You can see the S&P 500 currently at session highs, up about 0.5%. That does it for us on TV. Of course, we'll be continuing on radio. The close is coming up next.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
Carol Masser, Tim Stenivek, both out today.
Yeah. You know, they're on the plane right now. Tim actually just sent me an instant Bloomberg and asked if I was having fun. Turns out they have Wi-Fi on planes. Did you know that?
Yeah, I just, it's only recently that it started to work out well. But we are having fun, and we've got a stellar lineup for you over the next couple of hours. Abigail Doolittle is going to join us in just a second. She just darkened the door, so we'll hear what she has to say about this market. David Gura,
fan favorite over here,
is going to talk to us. He's a host of the Big Take podcast and a political reporter who's just also kind of jetting around the country following this campaign. A little bit later, we're going to talk to Matthew Palazzolo. He's going to round up the insurance side of the hurricane that we were just talking about with Lauren. It's interesting, the big insurers just don't want to underwrite any of the risk in Florida, and it's not because of the hurricanes.
Yeah, no, it seems like they're just pulling out of
it's because of fraud. The big insurers say there's just too much fraud in Florida to be there.
A sunny place for shady people. It's interesting. Of course, we'll also be speaking with Hannah Elliott, your other co-host. You have many.
Yes.
But that's for your podcast.
I have a podcast with Hannah.
I've heard about that.
It's called Hot Pursuit.
Yeah.
I recommend you download it on Apple Podcasts or wherever you get your podcasts. Right now, let's get over to Charlie Pellet. He's got to look at the markets for you. Just an hour left until the close of trading.
All right. Thank you very much, Matt and Katie. We got the Dow, the S&P, NASDAQ all pushing higher with the S&P very close to session highs. 59 minutes to go until that closing bell clangs on Wall Street. The S&P right now, 57.80, on track for a record, up 29 right now. Again, up 0.5%. The Dow up 346, up 0.8%. The NASDAQ Composite Index up 76. That is a gain now of just about 0.4%. 10-year at 4.06% with a 2-year 4.00%. Gold down $15 the ounce, 26.06, a drop there of just about 0.6%. And West Texas Intermediate crude oil now lower by 0.2%, 73.43 for a barrel of WTI. We have got the CPI number out tomorrow morning, 8:30 a.m. Wall Street time. Friday is when we hear from major banks, including J.P. Morgan Chase and Wells Fargo. Cameron Dawson is Chief Investment Officer at New Edge Wealth.
The message from the banks will be important because they'll give us a notion about small businesses, they'll give us a notion about consumers, and if we continue to see credit risk bubble up, look at default rates within consumers, that's That's what Ally was flagging back a couple of weeks ago. If you continue to see that, it would question some of this headline data necessarily not being as strong as maybe it looks on the surface.
Cameron Dawson was interviewed this morning on Bloomberg Surveillance. 6 million Floridians are being urged to flee from Milton's coming fury. Milton is a Cat 4 storm. Top winds 130 miles an hour as of the latest update. And of course, we'll have more on the insurers, more on the hurricane coming up on Bloomberg Business Week. Generic Holdings, meanwhile, running low on portable, Generac Holdings, I should say, running low on portable backup generators after Hurricane Helene and other recent storms knocked out power for millions of Americans. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charles Pellet, thank you so much for that update. Let's turn now to the markets, of course. Listen, an hour to go until those closing bells ring. Matt, you and I were on air when the opening bells rang, so what a special treat for us. You can see, actually, we're pretty much close to session highs when it comes to the S&P 500, your broad benchmarks right now. Let's discuss it with Abigail Doolittle, because we've seen a lot of day-to-day volatility. Maybe you are seeing a little bit of that reflected in the VIX, but you think about Monday, down bigly. Tuesday, up bigly. Now it looks like we have another up day. I mean, what is the mood, the psychology of the market at this juncture?
It's a good question, Katie, because when I look at the S&P 500 right now, it's breaking out of a tiny little range. So over the last couple of weeks into today, there had basically been a battle between the bulls and the bears. Lots of uncertainty about which way stocks should go. But today, the bulls are suggesting that they know something that means stocks should keep going higher. Now, is there a robust sentiment, a real risk-on feeling with this? I don't think so. I think that it's a bit muted. That said, it is an all-time high for the S&P 500. The NASDAQ 100 up just a little bit more, up 0.6 or 0.7%. The Russell 2000 lagging just a little bit. Interesting, of course, the banks, the KBW Bank Index up 1%, and this ahead of really the official kickoff for earnings season this Friday when we have some of those big banks report. I think that that's going to be a really important driver. In terms of that VIX, it is interesting. It's above 20. It's basically in backwardation. So investors are a little bit more uncertain, paying up to hedge or more against right now as opposed to the future.
I was going to ask you to define backwardation.
Me too. I mean, people have explained it to me over the last 25 years, probably about 7,000 times.
Well, do you know, I think that was actually on your guys' show a couple weeks ago where I kind of finally got it in terms of, I think I did. Actually, I'm always nervous when I hear people say that they've got it, but in relative to anything. But I was saying this is backward, and I think that's what it is. So basically, the VIX is a way of hedging out for future volatility. So we know the most about today, in theory. Tomorrow we know a little bit less about, and then so on and so forth. So if we know X about today, we know X minus 20 about, say, January, if that makes sense. We know less about what's going to happen in January. So in theory, the VIX should be higher for January. So if today's VIX is 20, a couple months out, it should be at, say, 25. Instead, January's VIX is at 18, and we're at 20. It's not huge. It's not a huge sign.
Nailed it. I love that explanation.
That was good.
One thing about backwardation, thank you, and again, it came on your show where I literally just sort of out loud said, but Chris Murphy and Steve Sosnick, some of these options experts, yes, great markets voices. They've both said that when the VIX gets heavily into backwardation, that's usually that capitulation bottom. Now, obviously, we're not at a capitulation bottom. I don't think it's a capitulation top either. But it's interesting that it's quiet backwardation. It's not that dramatic move, in the opposite direction.
By the way, we typically have the VIX rising. In fact, so often that I've always thought it's so silly to talk about volatility instead of just talking about markets, being down.
You thought it was silly to talk about volatility?
Well, because what a lot of times what people mean when they say volatility is up is that the market's selling off, right? Because it's always the same.
Well, that's a great point.
But
it can be to the upside.
It's different.
Yeah. Well, it's always been the case, but a lot of people, we just haven't talked about it that way. But volatility is to the upside and the downside. I can hear Steve Sosnick in my mind right now telling me that it's, and I could not explain mathematically exactly how the VIX is calculated, but it's basically, a lookout. I think it's 30 days. But yes, it is to the upside as well. Now, it never seems to work that way. It does when it goes higher. It seems to be a hedge or an outright bet on markets going lower. But it does catch my eye that it's above a 20. And the main reason, actually much less than the backwardation reason it catches my eye, is we've gotten so used to this VIX being, 15, sub 15, that complacent territory for such a long time outside of these little crazy spikes that we have. Why is it above 20 right now?
Yeah.
Now, I think it's the election, because the election curve has for months been closer to where it is now. It's been a little bit higher. And the real election VIX number theoretically should be for this month, October. And October and spot VIX are basically the same. Spot VIX just slightly higher.
It's really interesting. I will say now that we're at 20, and it doesn't necessarily feel like a 20 VIX market, but
it doesn't at all.
When we were really in the doldrums,
then that's what's interesting to me. It doesn't. It doesn't quite make sense.
VIX at 20, stocks at
record highs,
up for the 5th week in a row. Spreads at tights, like. It doesn't make any sense at all to me.
Well, the spreads at tights, but we interrupted you, and then we can go back to
No, I was
spreads
just going
at
to say,
tights.
when we were really in the doldrums of volatility, I was really hoping that we were going to see a single-digit VIX. We never quite got there.
I think we got there back in like 2016, maybe,
I wasn't
like
paying
in the
attention
2017.
then. Yeah.
No, we never quite got there. It's sort of, what was the lowest, like 11 or 12,
it was
somewhere in there.
Yeah, it was
That's still pretty interesting. And I will say, prior to the GFC, I was taught that the VIX, which I think came into existence in 1990 or 1992, something like that, that its quote-unquote normal level is actually right where it is now, is around 20. That below 20, it's a warning sign. Above 20, it's a little bit too high. But 20 shows that investors are alive, awake, they have a pulse, they're watching the risks, but they also have some risk on. So maybe that's the way we should be looking at this VIX. It's right where it needs to be.
Wow.
Cool. Just quick programming note.
Yeah.
Steve Sosnick is coming on our
great.
television show.
Open interest.
Wonderful.
Bloomberg Open Interest.
I think he's 9:30.
Friday at 9:30. So right as the market opens.
That's terrific. Hopefully he's listening right now. Let's see if we're getting messages. He's pretty quick on the messages. He and I actually spoke yesterday briefly.
He typically watches our show in the morning.
Yeah.
Yeah.
Well, it's a must-watch.
I'm going to guess he switches to radio in the afternoon, just like
Probably.
I do.
Yeah.
He honestly often does, because I'll
Power listener
frequently.
and viewer.
All right, Abigail, thanks very much. Abigail Doolittle there, looking at the markets for us. Another record high, the 44th. Is it the 44th record high for the S&P this year? David Gura doesn't know, but it doesn't matter, because we're just going to ask him about politics. He's here with us in the Interactive Brokers studio, and I guess
44 sounds right.
It's the 44th.
My gut tells me that's right.
Yeah, that's what my gut is feeling right now as well. Only 26 days until the U.S. presidential election on November 5th, and it's all about, I guess, the hurricane right now. Are they still going back and forth about Trump says FEMA has got all his money stolen by illegal immigrants?
Can you control the weather?
I mean, it's been a wild series of disinformation that we've seen. We've seen FEMA come out with a statement urging people not to listen to this and to go to better sources than these members of Congress and others who are saying this, and the former president of the United States who's saying it. But in all seriousness, there has been this kind of swill of disinformation, both about Hurricane Helene and Milton as well, and a lot of alarms sounded by both Republicans and Democrats just about the risks of that, what it would mean, especially in Florida now, as people are weighing and should be leaving their homes if they can trust the government. So there's kind of profound real-world effects of the kind of rhetoric that we've heard.
Well, talk to us about what we've heard from J.D. Vance as well, penning an opinion piece of sorts. I mean, what was his message there?
So he wrote an op-ed for the Wall Street Journal in which he said that the Biden administration really dropped the ball when it came to preparing for and dealing with the aftermath of Hurricane Helene. He's getting a lot of criticism for it in light of the fact that a lot of Republican and Democratic lawmakers in the state of North Carolina have said what he's written there is factually inaccurate, but he's saying that they should have moved